For every loudmouth leftist telling our troops to remember their oath, stop pretending you know what you're talking about. Here's what the oath actually says. I do solemnly swear that I support and defend
All
the
right,
Constitution of the United States against all enemies,
foreign and domestic. They have a tendency to forget that part, don't they? Go live, 3, 2, 1. Jared Schwab, how you doing? Carl, give me 1 second. We're getting rolling in here. Got to get this camera up and running. Come on. There we go. And there we go. And there we go. And one more down here. Here we go. And start streaming. Oh, there we go. There we go. Let's do this right here. You do that. Let's do that. And we are live. And okay, so we got 9. Streaming on 9 platforms. Good evening, everyone. My name is James. This is Dividend Stock Talk. Who do we have here? You can try to co-host with another. Yeah, no, thank you. Carl, Schwab, Doug, how's it going? Andrew, what's going on? Hey, it's BB. What's going on, BB? Flushing Mike. Mike, I'm not quite sure. KJ, good evening, and how are you doing today? Naughty Boats. Ooh, Naughty Boats. Ooh. I've been watching some of your videos. Cool beans. Sam, Ron, Naughty Boats. Okay. Yes, I have. I've been watching some of your boats, and yes, I am going to do the, what do you call that? The Great American Loop next year. Sam Cat, Alex, Retro Soul? Retro Soul. Ooh, gotta love that one. Gotta love me some James Brown. Schwab, Jared, Doug, Isri, okay. Monkey, how you doing? Captain, Thomas, what's going on? KB, Kale, what's going on? Saying hi to all these people. Brock, let's get it. Okay. Best Black Rider. Okay, Dirt Farmer, back again, I see. Flushing Mike, hello. Lachino D. Okay, Steve. What's happening, Steve? Calvin, what's going on? Michael. Paul. Yay, dividends. Cool beans. Stephen. Fabio, good evening. Olivia, good evening. Vader. CPI, Capital Bank Holdings. Okay, hold on a second. We'll take a look at that one. CPI, I'm not 100% sure if that's going to fit what we're doing, but we'll take a look at it. Faithful Mustang. I'm not even going to answer that question. That's just foolish. Chris Fred, how you doing? Manchester, what's going on? Bridget Willie, good evening. Hey, it's Mia. Okay, Mia, don't put your phone number on here. You want to text, you want to talk to me, fine. Send me your number in a DM that I can call. Your thoughts on selling weekly deep in the options. We're going to get to that in a little bit, Michael. Rafael. Okay, Rick Walter, good evening. Pass the water. Dirt Farmer, you're on 2 different stations. All right, that's cool. Any thoughts on leverage ETFs? I don't really do ETFs. I'm strictly looking for weekly cash flow, and a lot of ETFs do not have weekly options. Okay, got one for you. Annalie, come on, Annalie's on my list. We'll take a look at that one next. All right. Let's pause this one right there because I want to take a look at Annalie. Dirt Farm, we'll see that. Bill Nix, what's going on? Do you trade or invest in crypto? No, Vader, I do not. Terribly sorry. Alrighty. Michael. Obtuse Bean. Bro, looks like Michael Burry. I'm not sure if that's good or bad. Shirt puts on CC. Why not? Prithpal Tour. You actually got to give me a little bit more to go on than that because I'm not quite sure I got the first half of that. Okay. Prithpal Tour. Okay, why not? I'm not quite sure what you mean by that because I didn't get the first half of whatever question it is you're trying to do. John, good afternoon. What is your favorite thing to drink? Okay. No means short puts are better than covered calls. Your thoughts? Oh, I'm not really that hot on puts, number one. Number two, can you provide weekly cash flow? Absolutely. Just chill. We're going to get to that in a little bit. Mark Stuckey, how are you doing today? Okay. Alrighty. So CPI was first on the list. Veda wants to take a look at CPI. I have no idea what CPI is. So let's take a gander at it. CPI, that's even before we get to introductions. CPI, here we go. Well, terribly sorry, but CPI has no options. Okay, so this is an investing channel where we look at dividend stocks for weekly cash flow. More specifically, I'm looking to get weekly cash flow on dividend stocks, which means I'm looking for weekly options, and CPI doesn't have it. So who came up with that one? Yeah, Vader, CPI, no, doesn't work. Vaseline, good evening. Archer Warren, okay. Bernard, how you doing? Raful, good evening. Okay, do you know that cash secured puts is the same trade as a covered call? Yes, I do. Okay, you have to put a certain amount of money up front. For that, you get a return on your money. So whether it's a cash secured put or whether it's a covered call, you're still taking a big chunk of your money, setting it aside, and doing a call on it. Connor fan page, MSTY has not been in business for 2 years yet. It's like getting up on 2 years. But what I'm looking for is 2 decades. That's 20 years. Okay, so MSTY, maybe in 18 years, I'll take a look at it. However, MSTY dividends are not consistently increasing. Money manager, yay, thank you for that. All right, first and foremost, let's get with the introductions. My name is James. This is Dividend Stock Talk, where I invest in dividend stocks for weekly cash flow. Simple, safe, predictable, consistent 1% per week is what I'm looking for. Now, I'm only going to get that with pre-qualified dividend stocks. Now, the reason I want pre-qualified dividend stocks is because they're predictable. They're consistent. They do the same things over and over and over again. So if you can see something that's repetitive and consistently repetitive, well, why not take advantage of it? Well, that's what I did when my 9-year-old daughter back in 2008 said, Daddy, what are you doing? Can you teach me? Yeah, but they don't have a lot of growth. Yeah, in New York City, Stephen, I'm not looking for growth. You kind of jumped in there a little too quick. Okay, what I'm looking for, New York City, Stephen, simple, safe, predictable, consistent 1% per week. Cash flow. I'm not looking for growth. Okay, I'm 61. I have no desire to put my money into something and just watch it. I'm not planting flowers. All right, I'm not going to plant it and just watch it grow. No. I need consistent cash flow. I'm not looking for growth. All right, Stephen? So it's 1% per week with a dividend stock, specifically those companies that are consistently profitable. Okay, so that's what I'm looking for. Connor, do you only invest in stocks that have a good dividend yield? I don't even look at the yield, Connor. What I'm looking for is the consistency of profitability. Okay, if they have even a 0.5% yield or a 0.25% yield, I really don't care. Are they consistently profitable year after year after year after year? I'm not looking for the dividend. I'm looking at the dividend. There's a big difference looking for a dividend and looking at the dividend. Kimberly-Clark, KMI. Well, hold tight there, Stefan. Hold on. So as I was saying, consistency of profitability. As long as the company is consistently profitable year after year after year for 2 decades, that's 20 years. Okay, so if the company's not 20 years old, that's an automatic no. Okay, because a company that's consistently profitable, would I consider the S&P consistent? No, I wouldn't. Now, on that note, let's go check out the profitability of the S&P. I'm going to talk about the SPX, okay, the spiders, because that follows the S&P. So let's go take a look at it, and I will show you that the S&P is not consistently profitable. Oh, let's look at that one right there. All right, so who asked for that one? I don't even know what that is. It's an A and an E. Okay, Stefan, we'll take a look at Kimberly-Clark in a minute. Right now, I want to take a look at SPY and explain to him why I don't like SPY, or the spiders, the S&P. Okay, there it is right there. I want to go to, okay, SPY. Now, I always tell people if you're going to be investing, no matter what you're investing in, you need to have access to a financial website. Now, I use Yahoo Finance. Now, the spiders, S&P 500 ETF. Now, I'm going to look at the historical data. Now, historical data is the date, like today's date, the high, the low, the open, the close, the volume, everything you need to find on a stock. Also, what do they have? Let's go historical data. What I'm looking for specifically with the historical data is the dividends, the portion of the profits the company or the entity or the ETF pays out on a consistent basis. So here it is right here, SPY 500. Okay, S&P 500. Okay, so historical prices, here's the date, here's the local dividend right there. Now, I want to look at the dividends for the last 2 decades. That's the last 20 years. Okay, so dividends only. And I want to look at all of them, the maximum, 1993 to 2025. Well, I don't want to go that far back. I want to go back 2 decades. That's 2005. 2005, where are we? Right there. Here we go. Now, AE, do I consider S&P consistent? They're consistent, but they're not consistently profitable the way that I would like them to be. Now, let's take a quick look. The very first dividend, March 18th, 2005. You ready? Count with me if you will. So see if you can follow along. Follow the bouncing ball. Bouncy, bouncy, trouncy, trouncy. Fun, 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 fun. Okay, so here it is right here. March 18th, 2025, 46 cents. 46, it's right there. Next one, 48. That's higher. 52, that's higher. 67, that's higher. Okay, great. Next one, 51. Hold on a second. Isn't 51 lower than 67? It is. 51 is lower than 67. So higher, 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 lower. Higher, 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 lower. Higher, higher. Let's keep on going. 71. Higher, lower, higher, 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 lower, 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 higher, lower. Now, is that, we're only on 2010, right here. That's only 5 years. And we went down, what, 5 times, 6 times? That is not consistent profitability. Consistent profitability is higher, 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 so on and so forth. When I say consistent profitability, that means you're making more money this year than you did last year. You make more money last year than you did the year before. That's consistency of profitability. In order to be a dividend king, okay, it's the highest you can go, you have to increase your profits every single year for 5 decades. That's why there's not that very many of them. Dividend aristocrats. Consistence of profitability for 25 years. That means higher and higher and higher every year. Not, what do we have here? 71, 77, 64, 66, 69, 71, 56, 51. No, 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 hell no. Sorry, I don't like S&P. It's not consistently profitable. It's consistent, it trades every day. Well, yeah, so you're right about the consistent part, but not consistently profitable. Okay, it's context and, what was the other word? Perspective. Okay, now S&P does trade every day. You can make money off of it every day, but it's not consistently profitable year after year after year. So no, I don't like it. Do you only invest in stocks that have a good dividend? No, I don't. I already answered that question. Will my 9 to 5 make more than your investment in 10 years? I know absolutely nothing about you. How would I know? For all I know, you could be sweeping the streets in Buffalo, New York. I have no idea what you do. So why would you be asking me that kind of a question? I'm looking for 1% every week. Now, every week, 1% is 50% per year. So 50%, I'll tell you what, here's something that'll be fun. You ready? Let's do this just for the fun of it. Satisfy this guy's desire. Alrighty. So first thing I want to do is go to my weekly compound interest calculator. Okay, so Costco Peach Cake Avocado Investor. Alrighty. Now, let's just say, hypothetically speaking, okay, we have to have a number to start out with. Let's start out with $100 right here. This is a calculator that calculates on a weekly basis. So for the fun of it, 10 years, let's see what it looks like. So I'm going to start with $100 and put in $10 a week. Does ODFL have weekly options? I haven't logged into my Thinkorswim account in forever. Crypto, I don't know what to tell you. I never even heard of ODFL. All right, so for the fun of it, we're going to use this calculator just to see what $100, $10 a week for 10 years looks like, and see if that beats your 9 to 5. Okay, so let's change this to $100. Let's change this to $10 per week. Let's change this to 1% per week, because that's what we're talking about. And for 10 years, just for the fun of it, let's see what 10 years at $100 at $10 a week. Okay, I don't know if you can read that or not, but let me read it to you. 19331. So that's only $19,000. That's not a whole heck of a lot, but look what you put in. 5,300. That's it. You put in $5,300 and it turned up to 193,000. It's not a lot, but that's only $100 at $10 a week. 193,000 with a $5,300 investment. So $5,300 went to 193,000, almost 200,000 in 10 years. So I really don't know what you do for a living and how much of your 9 to 5 are you keeping after that 10-year period. Anyway, kind of silly, but let's keep on moving on. All right, what are we looking at? Crypto, tax on capital gains. Jonathan, if you want to volunteer to pay taxes, that's totally up to you. I make $3 a day in the sugarcane field. Okay. I don't even know if I want to talk to you. Silliness like that. Do you trade or invest in crypto? No, I do not. Mark Stuckey, how you doing? Yo, okay. What is your take on crypto is general? Now, don't get me wrong. Crypto eventually will be viable here in the U.S. At this moment in time, I cannot go to Dunkin' Donuts and buy some coffee and donuts with any cryptocurrency. I need to have cash. Okay, and cryptocurrency not widely accepted yet. I'm going to use that word yet because we are going to be forced into it whether we like it or not. But there's always going to be those rebels who want to deal with in cash. I'm one of them. Okay? If you've seen what cash does as opposed to what crypto or digital currency does, you probably wouldn't want to do crypto or digital cash either. Talk about how to avoid not paying taxes and capital gains. Okay, John, I'm not here for taxation. Okay? But let me just tell you this, John. You do a little bit of research. You're on TikTok. A little bit of research, and you will find that there is no exact law that requires you to pay taxes. Also, any tax you pay, any money you pay to the IRS is considered as a gift to the IRS. They're not going to tell you that because it's buried somewhere in that stupid ass book. Also, what's buried in that book that they're not going to tell you also is it's completely voluntary. Voluntary compliance. You volunteer to pay because you're such a nice person. Okay, you want to deal with that? You figure that out on your own. Don't drag me into it. Okay? Okay, I can point you in the direction for the people that actually know the law and those that are against it, because you have one person saying one person saying another. So we have different laws. Yep. Okay. Well, see, the IRS here, okay, you can look on their book. In their book, that 2,500-page book, voluntary compliance, completely voluntary. You're not required by law. Okay. There's a lot of things you can look at it and a lot of things you can't, but it's a payment through intimidation. But it works for them. So why fix it? Don't. All right, what are we doing? What are we doing? Can you explain? Nope. See, Arcadia, that's childish, man. Come on. Please explain the circumstances of when you would use rolling that is bouncing a ball has dropped by Friday on your weekly calls. Andrew, it's always going to be about the numbers. What did I buy it for? What strike price did I sell? Where is it at now? Where is it going? What does it mean? It always going to be a numbers game. All right. Stefan, Kimberly-Clark. Kimberly-Clark's on the list. Let's take a look at that. KMI. Kimberly-Clark. That's Kinder Morgan. Damn it. KMB. Kimberly-Clark. There we go. I knew it was one of them. Unfortunately, Kimberly-Clark's going to be a no for this week. I didn't even take a quick look at that. It's like a glance through the side of my head. See, to take a look at a chart, for me, it takes 3 to 4 seconds to decide whether or not I want to do that one. But it's for this week. Remember that. I'm a weekly trader. So every single week, it's a blank slate. So Kimberly-Clark's going to be a no this week, but next week, it might be a yes. So let's take a little bit deeper. Now, I always do things by the numbers. A, B, C, 1, 2, 3, so on and so forth. It's very scripted. It's very by the book, okay? Kind of like paint by numbers. Remember that? 1 is blue, 2 is red, 3 is green, 4 is yellow, 10 is black, 11 is brown, whatever. Paint by numbers. This is investing by the numbers. 1, 2, 3, A, B, C. Okay. Now, when I look at the chart, first thing I want to look at is the 1-year chart. I'm looking for 5 things, and it should take you 3 to 4 seconds. You can literally take a quick look at it and say, no. Let me explain what I'm looking for. And you should be able to see it just like that. I can't do it. Anyway, so 5 things I'm looking for. You ready? The high. The low. Where was it a year ago? Where is it now? And what's the motion of the ocean? The flow of the river, the path through the woods, whatever you want to call it. Up, down, up, down, up, down. It's actually that simple. And it doesn't take that long, 3 to 4 seconds. High, low, was, is. Okay, it's in a downward trend right now. Now, don't get me wrong, I love Kimberly-Clark. I really do. But let's take a closer look. Now, the last 30 days, this is what it looked like. Now, I always do my trading on Monday or Tuesday, and I like to be out on a Friday. So what I buy on Monday and Tuesday, we take a look on Friday to see, do we want to keep it? Do we want to let it go? What do we want to do with it? It's the same questions. What did I buy it for? What strike price did I sell? What did I collect? Where is it at now? What does that mean? What should I do? It's not that difficult, okay? Here's the high, same thing. High, low, where was it? Where is it? What's it doing? Up, down, down. That's simple, right? But this right here, a new 30-day bottom right there. Well, I like 2 days to the upside. I don't want to guess to where the bottom is because it can be lower tomorrow. So no, I want 2 days to the upside. And then on the 3rd day, I will jump in. So I'm going to write Kimberly-Clark down for next week because even if she was up tomorrow and Wednesday, Thursday would be day 3, which would mean I would decide to jump in on Thursday or Friday. But all my money's gone already because today's Monday. I don't leave my money sitting doing nothing. Okay, every single, it used to be 95% of my money was invested at all times. Now, not so much because people panic when the dude upstairs, the dude in orange, the orange dude, says something stupid and people panic. Well, they panicked in April, stocks dropped. I got a margin call, which means I was over leveraged. So I took care of that scenario. Now I'm trying to not be over leveraged again, just in case he says something stupid again and people panic. Because that's what people do. People panic, they sell, and they jump out. Well, there's nothing wrong with it. It gives us, people who keep our cool, keep our head, to buy at a bargain. So you panic and you sell at a loss. So let's say you bought here, Okay, you didn't know, and now it's here. Now you panic and you sell. Well, guess what? You just lost $10 per share because you panicked. I like Kimberly-Clark. They've been in business for almost 100 years. They've been consistently profitable for 5 decades. Kimberly-Clark is on the top of my list. However, I'm not buying it tomorrow. I'm waiting for it to find the bottom before I jump in. Plain and simple. Okay, let's go. What's next? What's next? Oh, so before we go any further, let's get some of the rules down so we understand where we're coming from. In 2008, my 9-year-old daughter says, Daddy, what are you doing? Can you teach me? So my 9-year-old daughter wants to learn how to trade stocks. Most adults don't get it. Most adults can't do it. So how am I supposed to teach a 9-year-old to invest? So here's my dilemma. Okay, it has to be simple. It has to be safe, predictable, consistent, and no way for her to lose. That fifth one always grabs people because people panic and they lose. I'd rather get 50 cents than lose it all. I'd rather get something instead of nothing. That's not the way I look at it. If the company's consistently profitable, this here means absolutely nothing. All it means is the value of the stock is down. The value of the stock not really related directly to the company. It is the public's perception of the value of the company. You're going to get the actual value of the company by looking at their assets, looking at their cash flow, looking at their market cap. How much of the market do they have? How much cash flow do they have coming in? What are their assets? What are their liabilities? That's the actual value of the company. The stock is just our interpretation of what we think it's worth. Isn't that weird? So I really don't care about this. The only thing I'm concerned about is it on an upward trend or is it on a downward trend? Because that's all stocks do. They go up and they go down. So if you like the company, such as Kimberly-Clark, give it a couple more days. It will find the bottom and it will turn around and go back up. What else do you think it's going to do? It's not going to come to your house and take the dog for a walk. It's not going to make the bed, put little candies on your pillows, wash the dishes, take out the trash. No, they go up, they go down. That's it. So to create a strategy for a 9-year-old, simple, safe, predictable, consistent, no way for her to lose. So I have to come up with some rules. After all, she's only 9. Okay, we all need rules to have a pleasant society. 5 rules. And they're pretty simple. Remember, created for 9-year-old little girl. If you don't understand it, Alex, I'm very confused. I've been watching for weeks. Are you purchasing for dividends or options? Alex, sit tight for a second. Okay. I'm not looking for the dividends and I'm not buying options. So you've been here for a while, Alex, so just sit tight. Everything will come together just like a good movie. Everything's a little confusing at first, but then it all comes together at the end. Okay? So sit tight. We're going to get there. I'll be here until 11. I forgot where I was. Oh, the 5 rules. Rule number 1. Now, these rules were specifically for my 9-year-old daughter. Rule number 1, never ever buy something that's not on the list. Now, you're probably thinking, what list is he talking about? Here we go. The list of stocks that you like. For my daughter, it was Dividend Kings. 5 decades. That's 50 years of increased profits. Dividend Aristocrats. 25 years of increased profits. Dividend Champions. 25 years of increased profits. The rules are a little bit different between the Aristocrats and the Champions, but still 25 years of increased profits. Dividend Contenders. 10 to 24 years of increased profits. And then just for the fun of it, we're going to peek over Warren Buffett's shoulder and hey, if it's good enough for Warren, it's good enough for me. That's the 5 lists that I have. When I say if it's not on the list, it's a no. See, that's a no. If it's not on the list, it's an automatic no. That was for my 9-year-old daughter. That was rule number 1. Rule number 2, never ever sell at a loss. It defeats the purpose of the whole game. And yes, it is a game just like Monopoly. 4 greenhouses, 1 red hotel. Go around and around, collect your $200. Don't go to jail, blah, blah, blah. Okay, rule number 3. This one always boggles my mind because I'm going to say it and there's going to be someone. Every night there is someone that ignores it. Rule number 3, make sure the company, is you ready for this? Consistently profitable. Why the hell would you put your money into a company that's not consistently profitable? You're going to see it before the night's over. I'd like to say 100% guaranteed someone's going to, because somebody already did. Okay? Consistently profitable. That's rule number 3. Make sure the company's consistently profitable. Rule 4, weekly options only. I'm not looking for the dividend. I'm using the dividend to tell me when to buy it. Now, we're going to get to that in a second, so sit tight. Rule number 5, make sure all the numbers work. We're going to explain that also. We're actually going to do a few trades so you can actually see how it is done. All right? So, when I say don't ever buy anything that's not on the list, you need to, in your own head, decide what stocks you like. I already told you which ones I like. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. Those are the companies that I like because they're consistently profitable and they do the same thing year after year after year. They're repetitive. So if it's repetitive, if it's consistent, if it's doing the same thing over and over again, well, that's something I can work with. Okay? Now the dividend. I'm not looking to catch the dividend. Let me show you. Let's get rid of this. Let's do this right there. Here we go. Tra-la-la. Right behind me, you see an EX dividend calendar. It's a calendar, Monday through Friday. All right, Sunday through Saturday, whatever. The dates. This is September 2025. Okay, here's all the dates. We are in the 22nd, right here. Okay, each one of these little tiny green dots represents a company that is going to pay a dividend. Now, a dividend, if you didn't know, is a portion of the company's profits that they give back to the investors. So when a company is profitable, they pay the investors a portion of those profits. You got 2 choices. A dividend-paying company, which is cash flow, or a capital growth company. Now, capital growth, they take the profits, put it back into the company, and you get growth. So at some point in time, you can turn around and resell it and get your profit. Okay, well, that doesn't work if you're retired. Because if you're retired, you need cash flow to pay your bills. Okay, I'm too young to catch Social Security. This is my pension. So I'm sharing with you how I take care of my pension from working all those years. All right? Now, Alex, you said you're confused. Let me explain. Dividends, Alex. You have 4 dates to remember when you're investing in dividend stocks. Date number 1 is the announcement date. That's when the company spokesman comes out and says, hey, everybody, my name is James. This is Dividend Stock Talk. This is how much money we made this year, and this is how you're going to get your share of it. Basically, the announcement date. This is what we made. This is what you're going to get and when you're going to get it. It's the announcement. Doesn't really mean anything. Okay. Date number 2. This is the big one. This is the important one. The number 1 date you need to remember. Date number 2. The EX dividend date. That is the last day the stock trades before the dividend is paid out. So if you're expecting to get a dividend, if you want to get a dividend, let's say Portland right here. If you want to collect this dividend right here on Portland, POR, it pays on the 25th, which is 2 days away. If you want to collect this dividend, you have to buy it on the 24th, the 23rd, the 16th, the 11th, the 2nd, any day before this date. That right? Oh yeah, there it is right there. Before this date, in order to be qualified to collect the dividend. The last day the stock trades before the dividend is paid. Date number 3, the date of record. You have to own the stock on the date of record to be entitled to one of the dividends. Okay? So if you buy the stock here, sell it here, well, you don't collect the dividend. You have to own it before the EX date and hold it past the date of record. Date number 4, that's the easy one. Cha-ching, that's when we get our money. It's called the payment date. Okay, 4 dates. Announcement date, EX dividend date, date of record, and payment date. Now, the reason why I only do dividend stocks is because, where's Portland? Right there. If I want to get the dividend on this one, or if I want to invest in that one, I buy it 2 weeks before this date. 1, 2, on a Monday. Buy it first thing on a Monday, sell a covered call, so I collect a premium for this week. Now, if on the 12th, the stock gets called away from me, well, I get all my money back and I can do something else the following Monday. Now, if someone doesn't take it away from me on this date, I write another covered call for this week. If it gets called away from me on this Friday, great, I get my money back and I pick another stock. If not, I will do it a third time, and I will do it a fourth time, and I will do it every single week until my target is hit. What's my target? Well, we're going to talk about that also as we go over examples. So it's not that difficult. I'm not looking to catch the dividend. I'm not looking to catch the dividend. I'm looking to the dividend to tell me when to buy. So the dividend for SNN is here on the 3rd. So 2 weeks before on a Monday, I will be buying SNN, or I will be looking at it to see if everything fits. And what am I looking for? Well, I go by the numbers. What's the chart look like? The high, the low, all that kind of nice, neat stuff. And what are the numbers? We're going to go over that in a little bit also as soon as somebody gives me a good stock to take a look at. All right? So that's why I am looking at dividends. I'm not looking to capture the dividend. I'm only using the dividend as an indicator to tell me when to buy it. Because you see all these stocks? 74 here, 20 here, 20 here, 57 here. That's over 200, close to 200 companies right there just in the first week of September. 200. Please tell me you can find 1 or 2 that you like. You don't have to buy them all. Just find 1 or 2 that you like. Buy them, collect whatever you're going to collect, either the dividend or the premium, whatever. Buy them. Okay, the next week, pick another 1 or 2. 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 Every single week. Next, let's go on. What else do we have here? Alex, did that make sense? I hope it did. Can you please check Cava? Luis, let's check Cava, and I do hope I don't have to yell at you. I really do. Because when I say never ever buy something you don't understand, okay. Cava Group. All right. Let's take a look at the numbers. Are you ready? First thing I want to see is the chart. The high, the low, where was it, where is it, and what is the movement? Up, down, sideways, down, up. So right here is the past couple of weeks. That tells me what direction it's going next. Now, it's not guaranteed. It just looks like that's what it's doing. Because if a stock does 2 things and 2 things only, up, down, look. Down, down, up, down, up, down, up, down, up, down, up. Well, that's what it looks like. Not guaranteed, but that's what it looks like. So, next, we want to check out the numbers. Remember, Rule 5, make sure the numbers work. Well, if I'm going to buy it, what's the number I'm looking at? 65.53, 65.53, 65.53, 65.53. Well, that's the current price, 65.53. Argue all you want, bitch, moan, complain. It's not going to change the fact that 65.53 is the number on the board. So if I'm buying it, 65.53, the closest strike price, I got 2 choices here. Okay, I can do the 65 or I can do the 66. Because either one, it's kind of like in between the 2 of them. So which one do I choose? It's a mathematical equation and it's a comfort level. The 65 is a safer trade. The 66 might be a little bit more profitable, but the stock has to go up. Okay? 65.53, it's already 53 cents in the money. That means it can come down 53 cents and I'm still good. Because if I buy it at 65.53 and I sell it at 65, well, I'm going to make my profit. And the stock can go up, sideways, or down, as long as that doesn't go below 65 by Friday. So I want to get in the morning and get out by Friday. Okay. Now, what if I do the 66s? Well, it's still over 1%, but the stock has to go up. But there's more profit available if the stock goes up. That's just obvious. If the stock goes up, well, you get the difference between the purchase price, 65.53, and the sale price, 66. So you get that along with the premium. Me, I would prefer safety, the 65, because I'm old and I don't want to take any unnecessary risks. Can it go up? Yes, it can. Can it go down? Yes, it can. Can it go absolutely nowhere? Absolutely. We've got three choices. Okay, at the 65, if it goes up, I'm golden. If it stays the same, I'm golden. If it comes down a little bit, I'm still golden, as long as it's above 65 by Friday. Does that make sense? Well, the high of the year, right there, the low of the year, right there. Now, I'm going to tell you something that I'm pretty sure you've heard over and over and over again. You make money in the stock market by buying low and selling high. Well, guess what? I don't care what anyone says. You cannot, I repeat, cannot get any lower than the low of the year. And that was last week. The low of the year, last week, right there. So let's check out those numbers. That being said, let's do both, the 65 and the 66. Keep in mind that the 65, the stock doesn't have to move at all. It can stay exactly where it is. The 66, the stock has to go up. But not really. Because remember rule one, never buy something you don't want to hold on to. Well, if I like this company, I don't mind buying it at 65.53. Remember that. That's always the important one. Number one is, does it make sense? Number two is, do I like this stock? Rule one, never buy anything unless you're okay with owning it for a long time or until it hits your target. In this case, my target would be 65. It's already above 65. As long as it stays above 65 by Friday, I'm good. So let's do a covered call. But before we do that, okay, we can't miss a step. Step one, get a list of stocks. Step two, put it into the calendar, because the calendar tells you when to look at what companies. Step three, take a look at the 1 year chart. We did. Great. Wonderful. Step four, the numbers. Okay, what am I buying it for? What am I selling? What am I collecting? Is that more than 1%? In this case, yes, it is. So let's see if it works. Got a question over here? Ooh, 4 questions. Uh-oh. All right, hold on. All right. KJ says, good evening. T-Mac, what's going on? Hey, James, one of your YouTube feeds died. Uh-oh. Uh-oh. Let me go find out which one that was. Not that one. All right. Give me a second. I got to check my YouTube feed. This is why I'm supposed to have help with this. Okay. So which one is this? Is this me standing in front of it? It probably is. Come on. Which one is this? Yep, that's me standing in front of it. Okay, so we don't want that one. Me standing in front of it? Probably is. Say hi. Come on. Which one is this? Yep, that's me standing in front of it. Okay, so we don't want that one. Say hi. Feedback. All right, so it's that one. All right. Not that one, so it's the other one. Damn it. Oh, shit. And I'm supposed to know how to do this. Oh, damn it. Jacob usually does this for me. It's my son, Jacob. Okay, let's get this out of here. Oh, crap. What is it? 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 Uh-oh. Restream. That's what it is. Restream. Okay, what's going on with Restream? Log in. There we go. My account. Log into my account. There we go. Give me a couple of seconds while this is loading. Why is this taking so long? There it is. Bless you for explaining. So you're buying calls or are you buying puts? I'm not buying either. Alex, I'm selling. Okay. How do you analyze the VIX into your option writing strategy? I don't. So Hairball 253, if you listen from the beginning, this strategy was created for a 9-year-old. Okay. When you're trying to explain the VIX to a 9-year-old, it doesn't really work out that well. All right. What are we looking at? Uh-oh. That sounds scary. Offline. None of these are working. Damn it. All right. Stream key. Copy. Here we go. Stop streaming. Stop recording. Okay, let's try this one more time. Uh-oh. I gotta adjust this because that's not working yet either. There we go, right there. And let's try this one more time and see if it's working now. All right. Whoops. No. All right, well, so much for that idea. We'll have to work on it another time because I don't really have the time to mess with it today. All right, we're gonna have to deal with it. Sorry. Where was I? Right here. Now, I forgot where I was and what I was trying to explain. Well, let's finish up with Cava. We're going to look at both the 65s and the 66s, see which one makes sense. Okay? All right. Boo to You wants to take a look at Colgate-Palmolive in a few weeks. Okay, we'll take a look at that one. Please explain the circumstances when you roll. It's all about the numbers. Andrew, what did I buy it for? What did I sell against it? What's it at? Where's it going? Those kind of things. It's always a numbers game. And it always starts out with, what did I buy it for? What did I sell against it? Where's it at? Where's it going? That type of scenario. Okay, so once we take a look at the chart, take a look at the numbers. Next, I want to look a little deeper into the chart itself. To do that, where was it a year ago? 130.39. The high of the year, 171.94. Now, the last 90 days, which is the last 3 months, same thing. Where's the high? Where's the low? Where was it? Where is it? What's it doing? Up, down, big drop, down, up. Okay, the bottom's right here. Now it's going up. 1, 2, 3. 3 days to the upside. I want 2 days to the upside. On the third day, I want to jump in. Well, guess what? The third day was today. No, I didn't see this one. Nobody pointed it out. No, I didn't take advantage of it because I only have so much time during the day or during the week to look at stuff. All right, let's look at the last 30 days because the last 30 days gives me a better idea of what's going on. Okay, so here it is. Same 5 things. You ready? High, low, where was it? Where is it? Down, up, down, up. Simple, right? The bottom, right here. 1 day, 2 days, 2 days to the upside. On the third day is where I jump in. Now, I admit I didn't see it, so no, I didn't take advantage of it. But let's take a look at it. This morning, she opened up at 63.31, but I wouldn't have jumped in at 63.31 because I would have jumped in as soon as it went over the high yesterday. So the high yesterday was right here, this one right there, 63.77. So more than likely, I would have sold off. I would have bought it right around 63, 64, and then I would have sold the 64s because it's the closest one. Okay, that's what I would have done. Now, I'm not gonna cherry pick, and I'm gonna tell you, well, I missed this trade. I didn't see it, but there it is. Okay, so the numbers. Let's take a look. Right now, like we said, 65.53. The 65s, 162. The 66s, 114. So let's see what it looks like. We're going to do 2 trades here. Write it down, the 65s and the 66s, and see which one you would have done if you saw it. Now, we didn't see it, and that's one of the good things about my morning trading group, because there are more eyes to see stuff. I can't see everything. So we have a bunch of people in the morning that someone say, hey, James, let's look at this. I go, oh, I didn't see that one. Okay, there's 10. Oh, wait, you know what? Let's do this before we move on. Before we finish this, I'm going to show you something. Because I look every single week. Let's go here. Every single week I do this just to see what the numbers look like. Okay, that is FinViz, Financial Visualization. It's a website to help you isolate dividend stocks. Screener right there. Oh, there it is right there. 10,434. That's how many stocks are available in the stock market. Last week it was 10,370. Well, this week it's 10,434. Now you got to pick which ones you like. That's an awful lot. Now remember I told you the difference between a dividend stock and a growth stock? Well, look at this right here. Dividend yield. Okay, now I'm going to isolate out of those 10,434 stocks, how many stocks pay a dividend? All right, so let's go here. Dividend, any dividend. Whoops, positive. Okay, so this week, 5,889 companies paying a positive dividend. That's a lot. Well, how are you going to choose which ones you like? Well, for me, it's consistency of profitability and weekly options. Okay, so we can take a look here. Check this out right here. Options. Now, unfortunately, it doesn't tell me whether they're weekly options or monthly options. It just says options. Well, if I click options, optionable. Now we're down to 3,482. Granted, that doesn't tell me if they're weekly options or monthly options. But out of all those dividend stocks, these are the ones that have options available. So the list gets smaller and smaller and smaller. But once you go to 20 years of increased profitability, that number gets even smaller. And FinViz doesn't have an indicator for that. So I go directly to, what do you call it? The list, Dividend Kings list, Dividend Aristocrats list, Dividend Champions list, so on and so forth. Okay. Let's get back to this trade. Remember this trade we're talking about? Cava, 65 or 66. Write down 65 and then write down 66. We're going to take a look at the rate of return for both of them. And then you've got to decide which one makes more sense. Now, this is not a tip, okay? And this is not a suggestion. This is what's called an observation. Somebody asked about the stock. We're taking a look at it. I'm going to punch in the numbers, and you decide which one looks better for you. So let's keep on doing this. All right, let's get rid of this. We don't need it. We're going to change it from single to covered stock. Because remember I said simple, safe, predictable, consistent. Okay, we got someone in the background making noise. Who is that? Andrew.
Sorry.
That's okay, Andrew. Not a problem. I got some more questions over here. I'm trying to act Judy, how you doing? I'm trying to act like a 9-year-old. It's not working. Thanks, okay. Judy, I'm trying to set up my TOC. Okay, hold on. Select dividends on the left-hand side. The watch list. Yep. You got it. All right, awesome. All right, you guys are doing pretty good. All right, so when I say it's simple, safe, predictable, consistent, you remember that? Simple, safe, predictable, consistent, no way to lose. That's what I'm looking at. Now, when I say no way to lose, people usually freak out. What do you mean, no way to lose? Well, look at it this way. Do you really, ask yourself, it's an honest question, can you really Honestly, imagine a world where there's no Coca-Cola. Think about it. Every single Coca-Cola machine, every single Coca-Cola bottling factory, every single Coca-Cola truck, every single Coca-Cola billboard, advertisement, all disappears overnight. Can you imagine that? I can't. Coca-Cola's been around since I was born. It's been around for 140 years. I don't see it going anywhere. Pepsi, same thing. Ford, General Motors, okay? AT&T, General Electric. These companies have been around for over 100 years. In the last 100 years, what have we seen? World War I, World War II, Vietnam, Korea, all that crap over in the Middle East, okay? Then we had, the stock market crashes. 29, 87, 2000, 2008, 2021, and 2024, 2025. Okay, and we've also seen the Great Depression. Remember that? Remember the Great Dust Bowl? We've seen that too. The oil embargo of the 70s. Okay, the Y2K crash. Okay, all that crap we've seen over the last 100 years. And these companies are consistently increasing their profits and consistently paying higher and higher dividends. That's what I mean by no way to lose. If you pick a good company that's been around for generations, 100 years, for a century. Yeah, Consolidated Edison's been around for over 200 years. Consolidated Edison, ED. That's the ticker symbol, ED. Okay? So that's what I mean. Okay. We're going to do the 65 first. Okay, so let's do the 65. Now, if you don't remember where I said consistent, simple, safe, predictable, consistent. Remember that? Consistent. Look at this. 26 September. That's this Friday. 3 October. That's next Friday. 10 October. 3 Fridays away. 17 October. 4 Fridays away. 31 October. 5 Fridays away. Every single week, there is a weekly option available. Think of it as a vending machine. You buy a Coke machine or a candy machine, bubblegum machine, whatever. You put it on the street corner. Every single week, you go and collect your money. Okay, this week you're getting a certain amount. Next week it might be something different. The week after that might be something different. Well, you're making an investment into, see, I like to change my thinking. Okay, I'm not buying stocks. I am buying a weekly cash producing asset. I'm taking some of my money, buying an asset. As long as I own those stocks, those shares, I can write a covered call, and that covered call will give me a cash flow every single week. You just got to make sure the companies that you buy, you're okay with. So first, we're going to look at the 65. There it is right here. Okay, this is the one we're doing. So let's take a look. The 65 right there. Right here we go. Now, I'm just going to buy one vending machine. Let's call it what it is. Maina, thank you. One vending machine or one contract, whatever you want to call it, at the market to open. Here's what it looks like. Here's what it sounds like. Say it really slow. Enunciate every single part. Because if you do it all at once, it's going to be confusing as hell. Break it down until it makes sense. You ready? Buy one covered call Cava. 100, which is the weeklies. 26 September 25. That's this coming Friday. 65 call. Well, that's the price I'm selling it for. Cava at the market to open to open. Now, I didn't stutter and I didn't repeat myself. To open, two opens means we're doing two trades at once. We're buying the stock that gets sent out to New York. We're selling the option that gets sent to Chicago. Chicago Board of Options, New York Stock Exchange. Two separate orders. One going this way, one going that way. It's easier when you visualize, okay? That's like when I say car, you don't think of C-A-R. You think of a red Porsche, a green Ferrari, a pink Lamborghini, or whatever you think of. Think of a car. C-A-R? No. You're thinking pictures. We think in pictures to associate what we're doing. All right, so here's the trade. That's what it looks like. Before you hit this send button, make sure this makes sense to you. Now remember when I said simple, safe, predictable, well, predictable means I know exactly what I'm making before I even do it. See right here? Max profit. 118 bucks. Well, that's how much I'm making before I even do this trade. So do I want to do it or do I not want to do it? Simple, safe, predictable, consistent. Remember, this week, next week, next week, every 7 days, I can write a covered call until it hits my target. What's my target? 65. What's it at right now? 65.53. Now you're probably thinking, if I'm buying it at 65.53 and I'm selling it for 65, I'm losing 53 cents. Yeah, you're absolutely 100% correct. However, you're collecting a premium, which is not on here. And the premium is higher. Even if you take that 53 cents out, it's still higher that you're bringing in a rate of return. That's what I'm looking for, that 1% rate of return. So let's figure out the rate of return. How do you get that? You take the profit, max profit, 118. You divide it by your investment. My investment in this particular gumball machine, cost of trade including commissions and fees, $6,382. So, calculator, come on down. You're the next contestant on Let's Make a Deal. All right, so here we go. First thing I want to do is take the profit, put the profit into my calculator, and that is 118. To find out my rate of return, I take the profit and I divide it by the investments. 6,382. 6,382. Comes up with a grand total of 1.84% for 4 days. Now, it's not a week, it's only 4 days. Why? Because we already missed Monday. Think of it this way. A week consists of 5 days. 9:30 a.m. to 3:59 p.m. 9:30 a.m. Monday morning to 3:59 p.m. Friday afternoon. That is 1 week's worth of trading. You can't get any more than that unless you do pre-hours or after hours, and there's different rules to those. So just sticking to the market hours, 9:30 a.m., 4 p.m. Okay, the most you're going to get is Monday, Tuesday, Wednesday, Thursday, Friday. 5 days. Monday's gone. You just lost 20% of your possible return. Tomorrow's Tuesday. After Tuesday, there's another 20%. Okay? So you just lost 40% on Wednesday morning. You have 3 days left. That's it. Okay? It's not as if Friday's not coming. Friday's coming whether you like it or not. See, that's why I do all my trading on Monday morning, because I sell options. I don't buy them. 80% of all options expire worthless. That means only 20% actually make money. So I have no desire whatsoever to buy options. I'm not in the business of losing money. All right. So,
Brother James,
yes,
what's the name of the stock that we're talking about here?
Cava Group, C-A-V-A.
So why wouldn't you push it out until next Friday?
Hold on, we're doing the difference between the 65 and the 66s, because the stock right now is at 65.53. So how do you decide, the 65s or the 66s? See what I mean? Uh-oh, he was there a second ago. I heard him.
Yeah, I'm driving and I want to put myself on mute.
Oh, you're driving. Yeah. Don't worry about it. So what I'm trying to figure out, based on your risk factors. Okay, for me, I do the 65, 1.8%. I'm perfectly happy with that. Let's take a look at the 66s, because 65.54 is kind of like right in the middle between 65 and 66. So how do you decide? Well, the 65 is 1.8%. So let's take a look at the 66. What does that look like? So let's edit and let's change it to 66, which is right there. Okay, same thing. Now here we go. Everything, not everything changes, but most things change. Okay? Buy one covered call Cava. 100, which is the weeklies, 26 September. That's all the same. Except for now, we're doing the 66 call option at the market, blah, 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 all that kind of stuff. But look at the profit. 165.50. Look at the investment, 6,435. So what does that look like? We're going to need that calculator again. 165.50 divided by the investment, 6,435, comes to a grand total of 2.5%. Do you see the difference? Okay, I'd be perfectly happy with the 65 because I'm 61 years old. I don't have the luxury of being wrong. It's a safe, because you have three ways it's going to go. Okay, it's going to go higher, it's going to stay the exact same, or it's going to go down between now and Friday at 3:59 p.m. So you have to decide which one makes sense to you. Okay? The 65, 1.8%. The 66, 2.5%. But the 66, the stock has to go up a little bit because it's at 65.53. Okay, if it doesn't hit 66, you still keep that money, and then you get to sell it again next week. Okay, so he asked about why not sell it to next week. Well, let's take a look at what does the 65 look like next week, and what does the 66 look like next week. All right, so let's get rid of this. Let's edit this. Okay, change it to 65 right there, and we're going to change the week to October 3rd. All right, now confirm and send. Here we go. Same thing, just different criteria. We're pushing it out 2 weeks, not 1 week. By one covered call, Cava 100, that's the weeklies. 3 October 25. That's not this Friday, that's next Friday. Okay? The market to open, all that stuff. Maximum profit 194. The investment 63.06. So let's see those numbers. I probably should have wrote the first ones down. 194 divide 63.06. Okay, so next week's 65's 3%. That's a lot better than 1.8, right? Okay, that's like 1.5 per week. Okay, that's fine. I can live with that. What's the 66 looking like for next week? Same thing. Let's do it again. Edit, change this 65 to 66. Here we go. Basically looks the exact same. Okay, by one covered call, Cava 100, that's the weeklies. 3 October, that's next week. The $66 call option at the market, blah, blah, blah. 247. It's almost the same amount of money. So let's get that calculator again. 247 is the profit. Okay. Now we're going to divide it by the investment. 63.53. 63.53. Grand total of 3.8%. But remember, the stock has to be above 66 by next Friday. And then you get that nagging question in your head. There's a couple of them. You ready? Number one, does it make sense? That should be question number one. Does it make sense? Question number two, do I like Cava? Question number three, do I like Cava at this price? And then it's like, do I want to do the 65s and be safe, get 1.8 for this week? Or do I want to do the 66s and get 2.3 for this week? Well, the 66s, the stock has to go up. The 65 stock doesn't have to do anything. It's just going to stay above 65. Now, it may sound confusing, but think about it this way. You're buying something that you like. You have to put your money somewhere. Okay, now people can bitch, moan, complain all they want, but you actually have no choice in the matter. The funny thing is, when I say this to my kids, they get pissed off because they think they have a choice. When I say you have no choice in the matter, my ex-wife hates it when I do it. You got no choice in the matter. Yes, I do. No, you don't. Friday's coming whether you like it or not. You're going to get older whether you like it or not. You're going to be so old that your boss is going to say, no, 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 you're too old. Keep your ass at home. You're a liability. Stay at home. That's when you get forced to retire. You have no choice in the matter. So we are human beings. We are the only species on this little rock floating around in space that's got to pay to live here. We do. We have to pay to live here. So depending on how you want to live is going to be directly related to how much money you have coming in on a weekly or monthly basis when you get to that point where your boss says, no, stay home. You're just too damn old. It's coming whether you like it or not. Whether you agree with it or not, or whether you're planning for it or not, it doesn't matter what you think, what you believe. Tick tock, ain't nobody stopping that clock. Terribly sorry. It's coming, whether you like it or not. And when you get to my age, retirement, you got two choices and only two. Hate to be the bearer of bad news. Two choices, that's it. Take responsibility for your money and do it yourself, or hand it off to someone else. Now, there's absolutely nothing wrong with handing it off to someone else if you have enough to hand off to someone else where whatever they give you, you can live off comfortably. Well, when I got to that age, I didn't have that much money. Okay, I can live comfortably on 1%. I'm perfectly happy living off the 1% of what I have. I'm okay with that. Okay, if I gave it to a money manager or account manager, yeah, they're going to offer me 4 to 5% per year. I'd still be working. Yeah, no thank you. I've been working since 1973 and no desire to go back into the workforce. As a matter of fact, I'm doing the world a favor. I'm stepping back and letting the younger guys come in because they're younger than me. They can do what I can't do anymore. Okay, I'm not delusional thinking I can do the same thing as a 20 and 30-year-old. I'm 61. This just does not work the same. It just doesn't. Okay, now I try to play soccer on a weekly basis. Lately, it's interrupting my obligations because I take care of my mom, taking care of going to my kid's house, stuff like that. I had the class reunion this weekend. I didn't get to go play soccer this weekend. I'd like to play this coming weekend, but I have no choice when life gets in the way. Anyway, it's always a choice. Pick a stock that you like. Find out when does it normally move. Dividend stocks have a tendency to be repetitive. That means they do the same thing every 90 days. Because think about this. Okay, there's 365 days in a year, 266 trading days, 4 quarters, April, May, June. January, January, February, March. That's quarter 1. Quarter 2, April, May, June. Quarter 3, July, August, September. Quarter 4, October, November, December. In a week, we'll be into quarter number 4. 3 quarters of the year is almost gone by. Whether you like it or not, whether you agree or not, and I know some of you hate it, you have no choice in the matter. You have no decision. The clock is ticking against everyone. So no matter what Nick Jagger says, time is not on our side. For you younger folks, it is. I'm 61. Okay? I am no delusion whatsoever that I have another 60 years to go. No, I probably get 30 if I'm lucky. 30 years. But guess what? The older you get, more shit breaks down. Okay, for those of you that are old enough and understand that, you wake up, and you ever hear an old person get up? Yeah, those are the aches and pains of life. Okay, when I was in high school, I got an injury in my groin. Okay, every once in a while it says, hello, remember me? Okay, I broke an elbow once, about 20 years ago. Every once in a while I said, oh yeah, I remember that. They come back to haunt you. Every injury you have will haunt you the older you get. It's a remembrance of the road you traveled. Anyway, so that's Cava. That's the 4 different ways of looking at it. This week, the 65, the 66, decide which one you like. Next week, the 65, 66. It's always going to be a numbers game. And then it's always the same questions. Does it make sense? Do I like this company? Do I like this company at this price? Is this something I can do? Hold on to it until I hit my target. Well, at 65, it makes sense to me. Okay, now if you're younger, you might go for the 66s because you're younger and you can afford to make mistakes. I can't. For those of my age and older, you know that you can't make the same mistakes as you could when you're in your 20s, 30s, and 40s. Because if you're in your 20s, 30s, and 40s, you got 10, 20, 30, 40 years to go before it's time for you to retire, for you to think about all the choices I made in my life brought me to here. Well, all my choices in my life brought me to here. So 1% every week, I'm perfectly okay with it. That's me. You got to figure out what works for you. Next, come on down. What are we looking at next? Okay, what do we have over here? Plastic surgery. Judy, that's funny. Yeah, I can't do plastic surgery, Judy. I'm sorry. I'm going to grow old gracefully. All righty. What do we look? Oh, Maina wants to take a look at Disney. All right, what am I missing here? Ooh, I'm missing a lot. Holy cow. Now, I tried to get to every single question. I'm not streaming anymore, so I'm only on 6 channels tonight. So apparently the 3 that's streaming, not working. So that's not working. So let's go. Here we go. Okay. Yep. New York Steve says, yeah, but you don't have a lot of growth. Yeah, Steve, I'm not looking for growth. Do you only invest in stocks that have a good dividend yield? I don't even look at the yield, Connor. Where did that question? All right. So user 6111811808635. Have no idea what your parents were smoking when they named you, dude, or dudette. Equal opportunity. ORLY. What the hell is that? ORLY. O'Reilly Automotive. Okay, interesting. Thank you for your input. No. How do you like that? That's a no. Do you know why it's a no? October, November, December, February, March. I can go on and on. Those are months of the year, not weeks of the year. I don't do monthlies. The numbers just don't work. I can say it really slow, and there's always going to be someone that throws up a monthly. I say, but I like it. Good, you do it. It doesn't work for me. If I'm getting 1 to 2% every single trade that I do, monthly, 1 per month. That's 12 to 24% at the end of the year. Okay, some of you might like 12 to 24%. 1 to 2% weekly, 50 to 100% period. Now you're talking. That's what I want. So I'm retired. Okay, the trading strategy was specifically designed for my 9-year-old daughter. That's where the 10-minute trader came from. She's 9 years old. How do you keep her interested? How do you keep her focused? How long can you keep her focused? It was very challenging to keep her focused for 10 minutes. Simple, safe, predictable, consistent, no way to lose, 10 minutes a day. That was the mantra for my 9-year-old daughter. So 10 minutes a day is about an hour a week. If you can get 1% for an hour of your time, now I have an account that has over 100,000 in it. 1 hour of my time is worth $1,000. Think about it that way. 10 minutes a day, 5 days a week, that's 50 hours. Turn the computer on, turn it off, blah, blah, blah. Let's call it an hour. An hour a week will equal 1% of your account. If you got 50 grand, 1 hour a week of your time is worth $500. You get $20,000, 1 hour of your time every week is worth $200, 1%. If you got $1 million, 1% is $10,000. Can you imagine $10,000 an hour for your time? Simple, safe, predictable, consistent, 1% per week. All right, what do we have next? Next, would you consider S&P consistent? Yeah, but not consistently profitable. Under the pending law, companies may be able to report only twice a year. That could be a problem. No, because see, here's the thing. The pending law means they only have to do an earnings report once every 6 months. That's just the earnings report. They're still paying the dividend. So if they come on in January and say, hey, this is how much money we made, this is how you're going to get yours. All right, I don't have to hear from them again for another 6 months. But Q1, Q2, it's still the same amount of money. It's just hearing from them less. Okay? So that's all that means. Say quarterly reports is once every 90 days. Well, the new pending law is once every 6 months or once every 180 days. It doesn't change the profitability. It just changes how often we hear about their profitability. That's all that means. All right, next. Connor, what index would you say is most consistent? Connor, I don't look at the indexes. If you know an index that's consistently profitable year after year after year, I'll be more than glad to take a look at it. At this moment in time, I don't know of anybody or any entity that tracks the payments or the dividends of all the indexes, whether or not they're consistently profitable or not. I have no idea. It might be something to take a look at, because it could be. But I do know most of the indexes are not consistently profitable year after year after year after year. Connor, quantum are growth stocks. That's not a question, Connor. That's more of an observation. But okay. Okay. Hi, Mia. Okay, that you did it again. Okay. Put your phone number. If you want me to call you, you got to put it in the, what do you call it? In the DM. DeMarcus wants to take a look at Apple. Ooh, I like me some Apple. No. Wasn't that quick? Was that too quick for you? Let me explain just a tiny bit. Are you ready? All right. The high, the low, where was it? Where is it? Look at the motion. Sideways, up, down, up, sideways, up. I do not ever buy at the high. Why? Why would you buy? Buy low, sell high. Not buy high and wait for it to go higher. No, I don't do the game. I'm not looking to buy at the high and wait for it to go up. No, I don't do that. Sorry. Next, see Miami, what's going down? Biz in a Benz. Cool. Lady Di, how are you? What is the main option strategy using here? I call it dividend capturing 2.0. That's what I call it. Rose, good evening. Option strategies, 100% Nay Academy. Thank you. Nate, what's going on? Donna, good evening. Lynn, good evening. Kevo, Peter Schiff's dad died in prison from teaching your IRS voluntary tax theory. Okay, I'm not sure who Peter Schiff is. All right, but it's not my theory. Okay, it's written right in the book. You can go to the IRS page. Okay, they actually have a web page, and you can go through those 2,500 pages. Not once in that book does it say mandatory taxes. It says voluntary compliance is what it says. Okay, Kevo? Okay, so you're on TikTok, the easiest place in the world to find that information. Put in IRS taxes voluntary compliance. Take a look and see how many times it's actually in that book. And no, I don't teach it. And it's not my theory. It's someone else's theory. I'm just repeating it. Lynn, how can I learn to trade so I can generate income? Lynn, this is your first time here. How are you doing? Thank you, Lynn. Thank you for stopping by. Thank you for your interaction. My best suggestion was keep coming back every night. I'm here every night from 9 to 11. Okay, I'll stay and answer as many questions as I possibly can until 11. Just keep coming back, keep learning, keep asking questions. Now, we do have a morning trading group. I promise I'm not trying to sell anyone anything. If you want more information of what I do, what I offer, in the bio, that's information there. Okay, I try not to sell anything. Okay, while I'm here, this is just me giving information. Okay. Little 5, UNH dropped a little too much for me to sell weekly calls. I'm stuck for a while. Okay, little 5, I'm going to disagree with you. UNH. Okay, whoops. All right, little 5, let's take a look at UNH. Are you ready? High, low, where was it? Where is it? What's it doing? Up, down, up, down, up, down, up, down. Okay, now you say you cannot write covered calls on this. Well, I'm going to disagree with you just a smidge. All righty. Oh, wow. Now, I don't know what you bought it for, so I can't really tell you too much. But what I can tell you, the high is here, 650. The low is here, 240. Okay? So let's look at the last 90 days. That's the last 3 months. Okay, same thing. We'll look at the same thing. High, low, where was it? Where is it? Down, up, down, up, down. Now she's turning right here. It looks like it's turning. Okay, now I have no idea where you bought it. But let's look at the last 30 days. Okay, same thing. High, low, where was it? Where is it? Down, up, down, up. Okay, so that's what it's doing at the moment. Regardless of what you bought it for, the current at the money option price, 341, 340 right here. It is selling for $6.05. Now, the question I have for you, you ready? Do you think this thing can hit 365? 365 is right here. Between now and this Friday. Can it hit it? Yes, it can. Is it going to? We don't know. What are the odds and probabilities of this thing going from here, shooting up $25 to here? The reason I ask is the 365 is going for 56 cents per share, or 56 cents per contract. Well, however many, I have no idea how many shares you own, but you can sell anyone you want. You can sell the 345s, the 350s, the 355s, the 360s. Where are we? 345, 350, 355, 360, 365, 370, 380, 390, 400, right up to 405. Because after that, they're not worth anything. Okay, you can, that's just for this week, just for this week. Now let's take a look at 3 weeks from now, the 10th. Okay, same thing. That goes all the way to the 10th of October. I can sell the 400s for 61 cents a share. Now the 400s is way up here. It's not even on this chart. You can sell anything you like. Now what I do, if I was going to do that, I go 4 to 5 strikes out. So right now it's at 340, right here. Okay, 4 strikes out is 1, 2, 3, 4, 350, which is right here. Nah, it's a little too close. Let's do the 360. That's me. That's what I would do. The 360 is going for 470 a share. That's $470 per contract. You can do whatever you want. You own that stock. You don't have to sell them if you don't want to, but you could if you wanted to. Now, every single position I have IBM. Hold on, look at IBM. IBM. Okay, here's IBM. The high, the low, where was it? Where is it? Look at the motion, up, down, 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 down. So it's definitely an upward trend. That big gap right there, it's going to fill that gap in the next couple of weeks, looks like. Looks like. It's not guaranteed, it just looks that way. Okay, so I am into IBM at 285, right there. I own it at 285. Am I panicking? Am I selling? Am I collecting something every single week? Yes, I am. Well, when it was at 285, I was getting a nice premium, and then it dropped 260. Well, at 260, I sold the 270s. Then it dropped even more to 235. Well, then I was selling the 240s and the 247s. And as it's going up, I'm moving my strike price up higher and higher, or I'm moving it out further out. So right now, I have an option in October 3rd. So I pushed it out 3 weeks because I want to have some kind of cash flow coming in every single week. Even though I'm in here at 285, and it dropped all the way down here, now it's going back up again. So from here to 35 to 271, yeah, there's going to be profit taking. See, it went up, down, up, down. Let's go zoom in a little bit closer so you can see. So from the bottom here, okay, here's the bottom. She went up, down, up, down, up, down, up. It's going to come back down eventually. Now I have a couple of choices. I could dollar cost average, which lowers my price, makes it easier for me to get rid of. Well, I could do that, depending on how much money I have available. Or I can continue selling these things as it continues to go up and generate some income so that I have income consistently. That's what I'm looking for. Consistency of income and preservation of my capital. I don't want to lose anything, but I want cash flow coming in. Okay? Because Social Security, I don't qualify for it yet. I'm not really looking for it to make a huge change in my life. I mean, I'll take the money. I mean, I paid it in, so I'm entitled to have it back. But it's not going to change my life. It's not going to cover the bills. Anyway, so yeah, UNH did drop, but what are you going to do? Ask the question. Okay, it did drop. Great. Well, what are you going to do? Are you just going to sit and wait for it to come back up, or are you going to generate some cash flow from it? That's a choice only you can make. All right, so what do we have next? What do we have next? Okay, Lynn. Okay, little 5. Okay, little 5. I hope that's understandable. Okay, just because you own this, think of it as a vending machine. So you overpaid for your vending machine. Now it's worth less. Not worthless, but not worth as much as when you got it. You can sell a covered call, but always make sure you're far enough away from where the action is and you check it every single day. It doesn't take long to check it. What did I buy it for? Well, you know what you bought it for. What strike price are you going to sell it? Well, you know that. Where's it at now? You don't know, but you could just by looking, because right now, 271. What's it going to be tomorrow? I don't know, but guess what? Tomorrow I will know. And then the next day I will know. And what happens on Friday? What did I buy it for? What did I sell? Where's it at now? What does that mean? You can do whatever you want as long it's because you own it. It is yours. You can do whatever you want. But me personally, I'm not going to sell the 285s on IBM because it's not worth anything. Okay, I'm not going to sell the 271s or the 272s because it's too damn close to where the action is. I'll do the 280s because it's far enough away. It's not going to give me a big fat chunk of money, but guess what? $20 per share or $20 per contract is better than nothing. It all comes down to a personal preference. Does it make sense? Do I like this company? What did I buy it for? What did I sell? What did I bring in? What does it mean? Where's it going next? Well, this looks like it's keep going up. But how far up is it going to go before up, down? Okay, went up, profit taken up, profit taken up. Where's the profit taken? It's coming. It is. When? Don't know. Tomorrow we'll find out what it does tomorrow. Wednesday, we'll find out what it does Wednesday. Thursday, same thing. Friday, same thing. We don't, I'm going to quote John F. Kennedy. You ready? We can't answer the questions of tomorrow with the knowledge we possess today. Basically, if I buy it here, sell it here, great. But if I buy it way up here and sell here, yeah, it's always a math problem. What did I buy it for? What did I sell? What's it at now? What does it mean? What should I do? One question at a time. First question, does it make sense? Anyway, next. What do we have next? Johnny, what do we got? What do we got? Keegan, what's going on? Up, down, left, right. How are you today? Zubaka. Is that right? Zubaka? It's an interesting name. Look at this guy, Dividend Stock Talk. Okay, so while he's here, okay, on my screen, let me tell you guys something so you don't get scammed, all right? Now, I've been online for quite a while, okay? You can actually go look at my YouTube channel. I have over 1,200 videos, all basically saying the same thing. However, this is kind of important. However, there are over 35 that I know of people pretending to be me. There's actually one in the audience right now. And he actually just sent me a gift. I find it a form of flattery. You're taking my information and you're passing it along. So here's the thing. Number one, I will not send you an email. I will not send you a text. I will not send you a WhatsApp. I will not send you an Instagram. I will not send you anything. If you want to talk to me, either go to the website, schedule a call, or DM me with your phone number, and I personally will call you back. I love talking to people. I love helping people out. You want to talk to me? Fine. But if you think you're talking to me in an email, a text, or whatever, you're not. And I don't know how many times to say that for people to understand. I do get phone calls and I do get nasty emails about me ripping people off. I don't do that. I don't take money from people unless they are standing in front of me, eyeball to eyeball, shake hands, and we can communicate that way. Okay, so if someone sends, hey, I got this great thing. No, it's not me. Okay, now I'm saying it here live, and I say it every single night. So he's here. You'll find him in the chat. There's like, I find he's got a set of balls. He does. He's taking my information and trying to make money off of it. Hey, good for you. It's a free world. I can't do anything about it. I can bitch, moan, complain, but they won't do anything. TikTok will not prosecute someone pretending to be me and scamming those less informed out of money. I feel bad for them. I come on live every single night and say, it's not me. You want to talk to me? Send me a phone number. I will personally call you. It's amazing. People send the phone number and I call them and said, oh, I didn't think you'd call. Yeah, you send me a number. I will give you a call. Okay, if I get the message. Now remember, I have over 12 email addresses. Okay, I have 9 channels. I usually live on 9 channels. Just for some reason tonight it's not working. So there's 3-4 channels that aren't being broadcast tonight. So I got to call Jacob. Jacob, come fix this. So yeah, my 2 sons will be helping me out in the near future. So hopefully get some of the kinks out of the system. Because this is a hobby for me. This is not a business. But it's getting to a point where I can't handle it all by myself. So that being said, be leery who you talk to online. All right, so let's keep on going. Cirque Knight. Mark B, what's going on? Your dream husband. Oh, not my dream husband. Julio Gonzalez. ¿Qué pasa, amigo? ¿Cómo está? Trade different. Glad you said that. Made 13,000 today in SPY SPX. Hey, good for you. 88 cons today. Okay, good for you. Bishop, how you doing? I'm watching you in Naples. Is that Naples, Florida, or is that Naples, Italy? Hollywood's in the house. Time to delete. No, it won't. Now, time to delete, I'm not 100% sure what that means, but okay. See Miami, how you doing? Okay. Seeger's platform, good evening. Gabriel, wow, big crowd tonight. Yeah, holy 350, cool beans. I don't know what the hell the draw is. I'm not that glamorous. Wildcat, Sam, what's going on? Back again. You've been here for a while. I've seen you before. Steph DeGloria, good evening, Steph. Justin, how are you doing? Digalang, okay, that's a weird one. Will not lose. How are you doing tonight? User 6, I'm not sure how and when to roll. User 6118, well, I'm going to call you Peter, all right? You don't know when to roll. It's a numbers game, okay? Every Monday, if I'm carrying something from the previous week, if I roll it from one week to the next, I'm always looking at what did I buy it for? What strike price did I sell? Where's it at now? Where's the stock going? What is the best play next? What's next? Roll it into the next week, let it expire, let it get taken away. I have 2 things that, 2 priorities. Number 1, consistency of profitability. Number 2, preservation of my capital. That's my 2 biggest things. Consistency, profitability, preservation of my capital. I'm 61, I have no desire to go back to work. None whatsoever. Okay, Calvin. Flower Power 49, how are you doing? Shackwave, good evening. All right, I'm going to grab my chair, get comfortable for a bit, because we have a few questions to go over. So let's go over a few questions. Do you give opinion on stocks? Logan, yes, I do. Chris Forte, don't bother. Cava doesn't pay dividends. Okay. I didn't say that it did. I'm just, somebody wanted to take a look at it. I looked at it. What time frame you're looking at? 1 day at a time. Okay. If I'm looking at the 1-year chart, it's 266 days. The 90-day chart, well, that's 66 trading days. No, wait a minute. 90 days, 22 months. Yeah, 66. Because each month has about 22 days. trading days. Varsil, what's going on, Varsil? Hello, hello. Couple Girl, good evening. The option expires at the close on Friday. Unfortunately, Chris, no, it does not. Options expire Saturday. Now, you cannot do anything after 3:59 p.m. because at 4 p.m., the market closes. The options don't expire until Saturday, but you can't do anything, so it kind of is. What happens if it drops to 64, for example? Lane Shoemaker. Number one, I don't know what stock you're talking about. Number two, if a stock drops lower than what you paid for it, you have to keep in mind, stocks go up, stocks go down. Once it goes down, it's going to turn around and go back up again. That's what they do. They go up, they go down. They go up, they go down. That's it. They don't do anything else. Okay, they don't come to your house and cook you dinner. They don't even take the dog for a walk or dump the trash. They go up, they go down. That's it. So if a stock you buy drops, remember rule 1 and rule 2. Never buy something you don't want to hold on to the rest of your days. That's rule number 1. Rule number 2 is sell at a loss. It defeats the purpose of the whole game. Why are you investing if you're going to buy something and then turn around and sell at a loss? It doesn't make any sense. And if you buy only good quality companies that are consistently profitable, even if the stock goes down, you're still going to get increased profits every single year. Now, what I'm teaching, I've never seen anybody teach this before for weekly returns. Most people buy a stock and just are fine collecting a dividend every 90 days and see what they collect at the end of the year. You know, hey, let's get IBM. It's a 4% yield. Wonderful. That's 4% for the year. No. I'm off for the weekly basis because even though I have IBM, at 285, I refuse to sell for less than 285. I will collect the dividend every 90 days. And I will collect a premium from selling a covered call every 7 days. So I'm having income coming in from an investment on a company that I believe in. That's what the whole stock market's all about. Never buy something you don't want to hold on to. Well, what's the purpose of buying it if you don't like the company? Don't ever chase a company just because they have a good dividend or just because you hear something in the news. Make sure it's something you want to buy and hold till the rest of your days. Other than that, it just doesn't make sense. Ooh, we got a bunch of questions over here, a bunch of questions over there. Chris, also, do you share what trade you are in for this current week? Yes, I do. Lisa, Texas, how are you today? Ooh, smoke weed day. Okay, smoke weed day. Okay. Versil, thank you. User, blah, blah, blah. The premium must be 1% of the current price. Is that right? Absolutely. Take a look. The current price, $271.37. So if I buy the stock tomorrow morning, $271, I'm going to sell the 270s because they don't have a 271. The 270s or the 270 250s. The 270s are going for, well, that's the wrong one. That's 3 weeks out. Those numbers look crazy. So we want to look at this week. All right, so this week is the week of the 26th, right there. Okay. 270, 250, 335. Okay, what's 1% of 272 or 271? 1% of 271, okay, 271. 1% of 271, 271. Think about it. $271. 1% is $2.71. You're moving the decimal point over 2 places. That's all you're doing. Think about it. 1% of 271 is 271. 271, $2.71. 1%. Okay. Is the premium 335, 460? That's well over 271. So yeah, IBM is a yes, but here's the thing. Even though I already own it, okay, I would not buy at 271. So your bottom is here. Look at that run up. from 235 to 271 is 36 bucks. 36 bucks on a $235 stock, that's about 13% increase. A 13% increase in 1 month, I'm taking profits. There's a funny thing about profits. Okay? You ready? It's funny. Number one, nobody ever went broke taking profits. Number two, it ain't a profit until you take it. If you buy it here and it's up here, that looks good on a piece of paper, but it doesn't mean anything until you take it. It's not a profit until you take it. Next. Chris, also, do you share what trade? Yeah, I already did that question. Logan, thoughts on NAK? Okay, Logan, I've never heard of NAK. Okay, NAK. Northern Dynasty. No. Now, the reason why I'm saying no, who said that one? Logan. Okay. Last October, this thing was at 40 cents. There's no way in hell that company is at 40 cents last year has 2 decades worth of profits. Dividends. I mean, dividends paying every single week or every single year. Okay? Terribly sorry. Okay, you may like NAC, it might have great possibilities, but at my point in my life, I need something that has historical performance, has historical data to it, consistently profitable year after year after year. I'm not looking for pie in the sky. I'm not looking to buy it at 40 cents, which was what it was last year, and then it jumped up to $2.40. That's a nice jump. It really is. But how often do you find that? Okay, you might be lucky, fine. That's not what I'm looking for. I'm looking for safety, predictability, consistency, profitability. Okay, I love the Lee family. Profitably, consistently, safely, all those. Premium must be 1%. That's right, correct. Next, Milano Camacho, what's happening? Encrypted passwords are numbers, letters, caps, up to 50-word passwords. I'm not quite sure what you mean by that, but okay. Dafun. What is the max drawdown with this method? It would depend on what time of the year, depend on who's in the office, and depend on what kind of stupid shit the person said it's an office. Okay, because you could have great, and the drawdown. Are you looking for daily, weekly, monthly, quarterly, annually? What drawdown are you looking at? 10-year drawdown, 5-year drawdown, 1-year drawdown, 5-day drawdown. You got to be more specific with your questions. Show us how to roll. That's easy. How to roll. You're going to need glasses for this. You ready? Let's get out of this. Well, let's go. This account here. Here. Okay, let's take a look at General Motors. Create a rolling order. You ready? Okay. General Motors. Create a rolling order. I love Thinkorswim. Has everything right there. Bring your cursor up there. You click on this, and it tells you it's right there. See? It fills it in for you. So I click create rolling order. There it is. And here's my rolling order. Okay? I'm buying back this. I'm selling this. And I'm collecting, 44 cents. No. See, right now, I'm in it at 59.04. The market maker is offering me 44 cents per share to roll it into next week. Well, 44 cents per share is less than 1%. Okay, I'm in it at 59. Why the hell would I take 44? Just give me my money back. As long as the stock stays above 59, which actually it's at 58.80, so it's below 59 at the moment. Okay, fine. I don't mind. It's General Motors. They've been around for over 100 years. I don't care. Okay, it's at 58.80. I've got the 59s, and it's only offering 44. So I don't want 44. I want 59. So I'm going to take this right here, and I'm going to increase it to 59. Right there. 59. Whoops. Nope. 59, right there, 59. Okay, now I'm going to sell it GTC, which means good till cancel, which means this will stay active for 90 days or until it fills or until it expires, which is September 26th, this Friday. So anytime between now and this Friday, if the market maker decides to give me 1%, which is 59 cents per share, okay, I got 600 shares, not a whole lot of money, okay, I'm going to hit confirm and send. And here's the trade. Okay, I'm going to sell six. They call it a calendar because I'm buying one and selling the other. It's called a calendar. GM 100s. I'm buying back the 26s, which is this Friday. I'm selling the 3s, which is next Friday. And I'm collecting 59 cents per share, which is 1%. That's $346 for this trade. Okay, I like it. So I'm going to hit send. There. Now it went to the market maker. It's going to sit on the market maker's computer until he fills it or until it expires. That's how you roll. Let's get out of here. All right. Next. All right, next. What stock is this? That was GM, General Motors. Encrypted passwords. Yeah, I got that one. Tyler, how you doing? Brian, Patrick, how are you? How many in your group? How many in the group or how many show up every day? It's a different question. There's plenty in the group, but only about 50 people show up every day. It's not that bad. Crypto mic drop. Good evening. Glass bar, how are you today? Jonathan Canfer, then sell. I have no idea what that means, but okay. User 6338105, whatever. Can someone help me with the name of the stock? I missed the first part. Okay, there's a lot of them. I don't know. Gary in DC, how you doing? Chris, thank you, Chris. Doug McKay, Lord No Face. Okay, interesting name. Eric, how you doing? The Blessed One, good evening. I like that movie. No, wait a minute. That was the Lucky One. Sorry. Melissa, good evening, Miss Melissa. How are you? Oh, thank you for that, Miss Melissa. Maina wants to take a look at Disney. DIS. Now, as far as I remember, I could be wrong, but last I checked, Disney paid a dividend once a year, and it's going to be a no for this week. Wasn't that quick? I barely even looked at the thing, and it's a no. Why? Let's take a gander. High, low, where was it? Where is it? Up, down, up, down, up, down. It's heading down at this moment in time. But here's the thing. I like Disney. Okay, here's your last 30 days about something like that. Okay, high, low, was, is, up, down. As soon as she finds the bottom, which could be tomorrow, the next day, or the next day, I'm going to write Disney down if, what do the numbers look like? 112.50, the 112, 168, 113, 118. Yeah, the numbers work, but the chart doesn't. Okay, numbers work, chart doesn't. I'm looking for the bottom. When the bottom shows up, it'll turn around and go back up. Because that's what stocks do. They go up, they go down, they go up. If you think a stock's going to come to your house and take you out for dinner, terribly wrong. Ain't happening. If you think a stock is going to help you with a flat tire on the side of the road, nope. It goes up, it goes down, that's it. Nothing. It doesn't do anything else. It goes up, it goes down, that's it. Okay? So let's keep on keeping on. Naples, Texas. Okay, so you get Naples, Texas, Naples, Florida, Naples, Italy. How many more Naples are there? All right, let's keep on going. Melissa, good evening. Spicy, good evening. Ashfora, good evening. Teba CM Trucks, good evening. Franklin, good evening, Franklin. Gary, Hike to Boy, good evening. Raja, good evening, Raja. Langawi, all right. Taurus King, good evening. Carlos. Realtor Harry Gelden. Realtor Harry, how are you today? Okay, Harry, you thinking about getting out of real estate and jumping into something that's more consistent and safer, less energy? And I don't know what your cash on cash return is on a yearly basis, but I like the idea of 50%. Me. Mindset shifter. How much do you need to start selling covered calls? Okay, mindset, you're asking the wrong question. Okay? You don't need anything. Okay? What you need is food, shelter, clothing. That's all you need. What you want is a total different story. Okay? Now, I have no idea where you are in your life. I have no idea what you have available. I have no idea where your money is sitting. But I do know at some point in life, your money has to work for you, and you have a choice to make once you hit retirement. Because if Social Security is going to work for you, you got no problems. But I have no idea how old you are, so I have no idea what point you're going to be. Okay? So you have to decide where you are, where you want to get. But I always urge people, never, ever, ever invest in anything until you perfected a paper trading account. Virtual. It's kind of like Monopoly. 4 greenhouses, 1 red hotel, go around, kick $200, pass go. You know, that type scenario. Well, they have the exact same thing for the stock market. It's called a virtual account or a paper trading account. Now, I've been trading for over 30 years, and I still have a paper trading account, and I still paper trade because I'm always coming up with new ideas and I'm testing new theories. So I want to make sure it works in a Monopoly game before I put more money into it. So paper trade first, then decide how much you want to start with, how much you want to work with. But take your time. Don't be in a hurry. Stock market's been around for over 400 years. It ain't going anywhere. You're not missing anything. Steven wants to take a look at MPW. MPW. Now, we did a lot of MPW a couple of years ago, but I don't do it anymore. Reason being, okay, current price, $5. The 5 is going for 14. Well, that's nice. That's over 2%. However, the 550 is going for 3 cents. What's after that? 0, 0, 0, 0. Yeah, no thanks. The premiums don't look that good. If you're not right, you're stuck getting nothing. So I like stocks. Let's look at Dell. Okay? Okay, current price 135, 275, 232, 187, 156. 3 strikes out of the money, I'm still getting higher numbers. I like stocks or companies that have nice premiums. Even if you're wrong, if the stock goes down, I want to collect something. MPW, if I'm wrong, if the stock drops, I'm not collecting anything because the numbers just ain't there. Marcus, Altria, love Altria, M-O, Altria. Ooh, not this week. High, low, where was it? Where is it? Up, down, up, down, up, down. It's coming down off of the high of the year. Great place to be, by the way, because you know where the high of the year is. Okay? She shoots up, she comes down. Okay? The bottom right here, today. Now, I want 3 days, 2 days to the upside. On the 3rd day, I'll jump in. Well, here's the bottom right here. Here's your 30-day top, profit taking, 30-day bottom. Eventually, that will turn around and go back up again. So I'm going to put Altria on my list for next week. Because as soon as this thing bounces up and goes up, I want to be there. Because I bought, and Altria is a great company. I bought it many, many times. Keep on keeping on. Ronald McDougall, what is with the 20%? Okay, wait a minute. What is with the 20% you lose each day? Who gets the 20% you have to do the option on Monday to get the total premium? Okay, Ronald McDougall, I think you misunderstood what I said. Okay? Now, for you to understand what makes up this price right here, the option value, okay, that you have to deal with the Black-Scholes pricing methodology for standardized options. Okay, when I say 20%, Monday through Friday is 5 days. To get 100% of the time value, Monday, Tuesday, Wednesday, Thursday, Friday, okay, 100% divided by 5 days is 20%. 20, 20, 20, 20 is 100. That's 100% of the time value. So on Monday, you have 100% of the time value, or the theta. Okay, so as we get into the Greeks. Now, I didn't teach this to my 9-year-old daughter, so I kind of didn't want to teach it to you guys either. But if you really want to take a deep dive into it, I prefer not to, because it's complex. It is very, as a matter of fact, let's pull it up just so that you can see. Because sometimes it's easy to show you what a bowl of soup looks like, vegetable, not alphabet soup, rather than, why is nothing popping up? Uh-oh. Uh-oh, OBS crashed. Bummer. All right, having an issue. What I was going to do is I was going to bring in out the Black-Scholes pricing methodology for standardized option. It's a mathematical equation that's huge. There's a lot of, let's look at it this way. There's a lot of chefs in the kitchen playing with this soup, so to speak. There's a lot of attributes, a lot of things to make up the pricing of the option. 1 is time, 2 is implied volatility, 3 is current stock price, 4 is date of expiration, 5 is the actual price underlying of the stock, what's the price of the stock at the moment, and there's a few others. But time value, Monday through Friday. To get 100% of the time value, you got to jump in Monday morning, first thing, be out Friday afternoon. That's the full 5 days. 5 days, 20, 40, 60, 80, 100, 100%. Okay? So I'm sorry if I didn't explain it enough or properly. But yes, Monday's gone. So you've already lost 20% of the time value. Okay, so tomorrow, if you wanted to jump in, you will get 80% of the time value. Now, if you get up first thing in the morning, so if you get in tomorrow afternoon, well, you have, what is it, 75? So as the time ticks away, look at it this way. As the sand goes through the hourglass, so the days of our lives. As the clock keeps ticking, so does the time value decrease. Okay, Monday through Friday. 5 days, 100% time value. Monday's gone, now you have 80% of time value left. Tuesday morning to Friday afternoon. I hope that explains it. Mineshaft Sifter depends on the stock. If it trades 65, it would be 6,500. Oh, he's talking about 100 shares. Okay, that makes sense. Okay, Lane Shoemaker. At the beginning of the week, it's 1% gain. On Wednesday, it's only 6%. That's the 20%. Okay, that makes sense. Relges. All right, he's leaving. Bye. Becky, how you doing? JM, Cancer Sign, how are you? Andy and Anita's travels. Ooh, I'm kind of interested. What are your travels? Number 1. Number 2, do you have a YouTube channel or do you have a blog or something that people can follow you depending on what the topic of interest is in your travels? Because I'm going to create my own YouTube channel on my travels, because you guys may not know this, but I am going to be doing the Great Loop I'd like to do it in January, probably starting somewhere in Florida and going up the East Coast. Now I'm going to stop see, here's the funny thing is, I've never done it before. I never jumped in a boat, went from one port to the next, to the next, to the next. Now, I used to be a fisherman back in the 80s, but that was a long time ago. We take a big boat out and we go out in the middle of the Gulf, in the middle of the bay, because it was in Massachusetts, and we do our fishing, and then we come back in again. Well, yeah, that part's easy. Well, if I'm starting in Florida, I'm going from one port to the next, to the next, to the next, and every single night I'm going to do the exact same thing, which means every single day there'll be an opportunity for someone who might be local to come and join us on the boat. And then might be an opportunity to go in from one port to the next port. Because we're getting, and I like to get a 50-footer. I think that would be comfortable. But I definitely want it to be over 40. 60 would be great, but I don't think it's in my budget. Anyway, but that's going to be my adventure. So I was kind of curious. Do you have a web channel that people can follow, and what is the topic of your conversation? The topic of my conversation will be, Papa G's adventures and Dividend Stock Talk as I go up and do the Great American Loop. For those of you who don't know what that is, there's plenty of videos explaining the Great American Loop. All right, let's keep on keeping on. Dave, now tell your followers what happens if the stock goes from 65 to 40. Okay. Dave wants me to tell you if the stock goes from 65 to 40, it went 65 to 40. I'm not quite sure what he's trying to get out of that. Are you trying to ask what are they supposed to do or what happens? Well, if the stock goes from 65 to 40, that's all that means. It went from 65 to 40. I'm not seeing what you're saying. But Dave, if you're thinking that you're losing, no. You only lose if you sell at 40. So if I buy a stock at 65, remember, I only buy stocks that are consistently profitable and consistently pay dividends and have weekly options. So if I buy at 65, okay, I'm collecting the dividend every 90 days. If it goes from 65 to 40, well, I'm still collecting the dividend every 90 days. Also, at 65, well, I'm selling the 65 call option to get a nice 1% premium. If it goes down to 40, I'm not selling the 40, I'm selling the 45 or the 47 or the 50. I'm going out far enough where something is coming in and I'm still collecting the dividend. Now, Dave, I look every single day, so I have a good grasp of what's happening on the stocks that I own. Also, there's an opportunity to do one of these things. You ready? You prick your cursor right up on the screen, you right click, you see that right there? Come down here and it says create an alert. So the alert right there. So if I get a stock at 60 and it drops to 40 and I sell a 45 against it, well, I'm going to set the alert at 45. So as soon as the stock hits 45, it's getting close to my strike price. I want to be alerted. Guess what? It's going to alert me on my computer. It's going to send me an email and it's going to send me a text on my phone saying, hey, bonehead, the stock just hit 45. You're at risk of losing. Well, great. I got the notice. Now I have to do something. I have no idea what you want me to tell you, Dave, that makes you feel better that stock goes from 65 to 40. They all go down. If you think you're going to buy something and it's not going to go down, someone's feeding you a line of bull. Seriously. They go up, they go down, that's it. It's almost guaranteed 100% you're going to buy something and it's going to drop. It's also the other way around. You're going to buy something and it's going to shoot up. It's guaranteed. It's going to go up, it's going to go down. It does every single day. It goes up, it goes down, it goes up. What do you think they do? Seriously, it's a serious question, Dave. Do you think stocks don't go up or down? Because that's all I've ever seen them do. They go up, they go down, they go up, they go down, they go every single day. Up, down, up, down. So if I buy it at 65 and it drops to 40, okay, so it went from 65 to 40. Big deal. I'm still getting the dividend every 90 days. And if I pick the right stock, it's going to increase every single year because that's the stocks do that I invest in. Now, if it drops to 40, kind of like my IBM, 285, now it's at 240. Did I lose money? No, I didn't, because I refuse to sell for less than what I paid for it. Number one, never buy anything you don't want to hold for the rest of your life. If it's consistently profitable, great. You're going to get increasing dividends every 90 days, and every year is going to get higher and higher. So I'm not quite sure if that's what you wanted to hear, Dave, or did you want to hear something else that makes you look better? No idea. Patagon's Investing, how are you doing today? Izan, what's going on? Inzan? Okay, how you doing? Miriam Gaffer, how are you today? M, support from generous angels, increase, blah, blah, blah. Okay, thank you. Rain, we already looked at Disney. Lola, how are you doing today? Lord No Face, I like it. I'm glad you do. I can't even read that one, but okay. EG, what's going on? Samuel, how are you doing? Camus777, do you have a class? Every morning I do. Now, I promise I don't try to sell anyone anything, but if you want to join the class, you got to go in the bio. It says right there, live trading. Okay, then you click on that button that tells you how to do it. I'm not trying to sell anyone anything. Are you bullish on MSTR? All right, so grand, whatever. You weren't listening to what I was saying. MSTR is not 20 years, 2 decades of consistent profits. So no, I don't do MSTR. Sorry. Next, Night Drifter, how are you? Marianne, great impact, thank you. Franklin iCard, 20,001 option last week, got $300 in 4 days this Friday, hopefully another 250. Can I get more? Frank, you do know that greed is going to bite you in the butt, okay? I'm perfectly happy with 1% every single week. 1%, I'm fine. Can I get 2, 3, 4? Yeah, I could, but then I'm trading my time for money. I'm retired. I have no desire to trade my time for money anymore. I would prefer to go outside and watch the grass grow. Or you know what? Some of you may have seen it. I have a nice aquarium. I'll sit in front of that aquarium and watch the fish swim for hours. I got fiddler crabs. I like watching them crawling all over the coral reef. I even got crayfish. I hate those fuckers. I got them so they'd clean the bottom of the tank. Little did I know, they grab my fish alive and they eat them alive. Not the crabs. The crabs don't eat live fish. They only eat the dead ones. But the crayfish, yeah, they'll take them. Yeah. All right. Anyway, any expectations on Dogecoin? No, I don't do cryptocurrency. What do you mean 1%? Chris doing work. All right, Chris doing work. Let me explain what 1% is. Hold on. Let me keep on going. Where did I stop? TT. Oh, wow. I'm missing a lot of these questions. Uh-oh. All right. 86 is in the house. All right. Okay, here we go. Wait. All right. Where are we? Right there. And, ooh, I travel with TNE. I have no idea what that means. Most definitely Franklin, only 2 of the margin, but he doesn't recommend. Yep, I don't recommend margin until you know what you're doing. Franklin, travel with, do you have any info on a stock? I have lots of info on a stock. I missed that question. Real talk, second visit. Lord No Face, thank you. All right, hey James. Nick, no nickname. Hey, Becky, I haven't seen you in a couple days. How you doing? 86, dude, 86, do you see what time it is? You're just getting here? Okay, now, I got nothing else to do for the rest of the night, so I'm going to hang out a little bit longer. We got over 300 people. Let's just stay. Let's see what we got. Merck. Paul wants to take a look at Merck. Let's get rid of this. So I hope that answered the question about if a stock goes down. So great. Stocks go down. They all do. You can't name. Seriously, you cannot name a stock that goes straight up and never went back. No corrections ever. You can't. Okay? I challenge anybody. Give me a good, no, never mind. I'm not even going to bother with that. Merck, MRK. I actually have some Merck, but let's take a look at the numbers. Okay, what am I looking for? 5 things. You ready? High, low, where was it? Where is it? Look at this. Down, sideways, down, up, down, sideways, up, down. So it's on a downturn at the moment. Okay, fine. Now, I do like Merck. I do buy it often. Let's look at the last 90 days. Here we go. Same thing. High, low, where was it? Where is it? Look at this. Up, down, up, down, up, down. Okay, so this right here, kind of wishy-washy. Bottom was here, 1, 2, 3 days to the upside. Yep, you jumped into that. Guess what? All right, anyway, let's take a closer look. Okay, here's your 30 days. I'm going to do this. Watch. You're going to like this. I'm going to go back one day. Look at this. This is what we saw yesterday. We saw this last night. And I said, yep, I'm buying this thing tomorrow morning. Well, guess what? I bought some and it kind of went the wrong way on me. But let me explain it to you. 30 days ago, here's the high. She drops, retrace, drops, retrace, drops. Here's the bottom right here. Last Wednesday. Tuesday's one day. Wait a minute. Tuesday. Sorry. Tuesday was the bottom right there. Wednesday's one day up. Yeah, Wednesday's one up, Thursday, and Friday. There's your 3 days right there. Okay? That's where I should have jumped in right there. See, it looks good. Okay? Down, up, down. Now it looks like it's going up. It doesn't work all the time. Look what happened today. Go forward one day, there's today. She opened up here, closed here. Guess what? It doesn't work all the time, but here's the thing. Do you like Merck? Well, I do. That's why I bought it, because I like the company. Now, I buy it at, what, 81 something, and I sold the 81s. I got my nice 1%. Okay, fine. I made the profit that I'm looking for. Well, now it's turned around and going back down again. It has a new bottom. Well, that doesn't make me happy, but guess what? I'm not panicking. I'm not selling it at a loss, and I will hold on to it until it retraces. Because if this is the bottom of the year, I'm fine with it. But I don't know until I see what happens tomorrow, the next day, and the next day. And then I will weigh the pros and cons. Should I dollar cost average? Should I just wait for it to recover? But I am, listen closely, I am going to sell a covered call and bring in something. Let me give you my cow analogy. Okay, some people just don't understand, but here's my cow analogy. If I buy a cow and a cow gives me a gallon of milk every week, a gallon, hold on. What do you mean a half a gallon this week? Am I going to get rid of my cow? No. I'm going to hold on to it. I'm going to just make sure it's okay. And I'll take the half a gallon every week. Well, what if it gives me a quart? I'm not getting rid of it. I refuse to sell at a loss. It makes no sense to me. And Merck consistently increased their profits year after year after year. Okay. All right. As soon as we drop below 300, I'm calling it a day. So we're at 361. All right, fine. That's just on this one channel. Now we got 6 channels going. So I have no idea how many people are here because a lot of them don't have counters on them, but this one does. All right. So I like Merck. I do. But I jumped in this morning because everything looked good. Did I realize it was going to drop down? No. But I'm okay with it. I'm not panicking. I already collect my profit for the week, so I really don't care. But I'm going to care on tomorrow and the next day and the next day, because what am I looking at? What did I buy it for? What did I sell? What's it at now? What does it look like it's doing? Well, at this moment, it looks like it's going to go down. So when Friday comes, my questions are going to be the same. What did I buy it for? What did I sell against it? Where's it at now? What does that mean and what should I do? Because I had 2 goals. 1, consistency of profitability. It means income coming in every single week. 2, preservation of my capital. I'm going to tell you something. I do not have the luxury of being wrong. See, some of you don't know what that means. I'm 61. If I'm wrong and I lose money, guess what? That 1% I collect every week is not going to be enough to cover my bills, which means I have to go back to work. Hey, welcome to Walmart. How are you doing today? Oh, yes, that's in aisle number 53. Yeah, no, thank you. All right. It's possible. Okay. All right. Possible, but not probable. AREC, Texas oil field trash. Okay. Hey, James, how many? I missed that one. AREC. American Res Corporation. No. Oh, come on, dude. Weren't you paying attention? If this thing's at 40 cents in April, how the hell can it have 2 decades of increased profits? That's what I'm looking for. You can invest your money any way you want. I refuse to invest my money into a company that's not consistently profitable. I'm not looking going from 40 cents to 3, 4, 5, 10, 30 bucks. I'm not looking for that. I'm past that point in my life. If that's what you're looking for, you are definitely in the wrong place. I'm not looking for capital growth. I'm looking for consistency of profitability. That means money every single week. That's what it means to me. Okay, I'm not looking for this. And you got 10,434 stocks. That's a lot to go through. How often do you get this? And it's a monthly. I don't do monthlies. The numbers just don't work. Terribly sorry. NVIDIA, hell no. Orlando, you've been here before, dude. Orlando Perez. I mean, how many Orlando Perez's could there be? I'm a CBO floor broker. Stocks don't just go up and down. Some of them stay down forever. I'm going to disagree with you. You show me one stock that went down and didn't turn around, go back up again. Show me one, Dave. Okay, as far as I know. Okay, as far as I know, the stocks that have consistently increased their profits year after year after year, Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, everything on Warren Buffett's list. Okay, you might be talking about stuff not on my list. Those are the only ones I'm interested in. Consistent, profitable companies. Okay, Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. Those are the companies I'm looking at. Okay, you may see some stocks that drop and never return. Well, those aren't the ones I'm looking at. Because if it drops, I can almost guarantee if the stock drops, the dividends are going to drop. The dividends drops, they're off the Dividend Kings list. They're off the they're off the list. It's that simple. So if it's off the Dividend Contenders list, off the Dividend Aristocrats list, I'm not trading it anymore. So I really don't care. Okay? I can't concentrate on 10,434 stocks. Can't do it. I'm only looking at 300. And I'm not looking at 300 all at once. I'm looking at 300 broken down like this. Okay? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 companies the first week of September. That's all I'm looking at. Every single one of these companies have been profitable for at least 25 years, that's a quarter of a century. I can look at each one of these and I can almost guarantee that all of them have not dropped, kept dropping, 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 and dropping. If they did, they wouldn't be a Dividend Aristocrat. Okay? As soon as you miss one dividend payment, you are off the Dividend Aristocrats list. It's off my list. It doesn't show up on my calendar, which means I'm not looking at it, which means it doesn't exist to me. So what you're saying might be true for people buying something less than desirable. That's not what I'm looking for. Dividend Kings, 5 decades of increased profits. Dividend Aristocrats, 25 years increased profits. Dividend Champions, 25 years increased profits. Dividend Contenders, 10 to 24 years consistent profits. And we all know who Warren Buffett is. He's not going to buy a piece of crap. He's not. And if he's, whatever he's buying, I'm going to look over his shoulder and I'm going to do the same. Okay, so what you might be saying, it might be true, but not at what I'm looking at. Okay, NVIDIA, hell no. Orlando, let me show you something on NVIDIA that, come on. What is this? Having an issue with my internet. Well, at least with that part. Nope. Having an issue. Oh, there it is right there. Okay, so NVIDIA. NVDA. Now, NVIDIA may have dividends. It may. But let's take a look at what the dividends look like. Okay, here it is, NVIDIA, right here. $183 per share. Okay? You're paying $183 a share for 1 penny. That's their dividend, 1 penny. Explain to me, Orlando, why you think paying $183 to collect 1 penny, why do you think that's a good idea? Because we're not looking for capital growth. We're looking for dividend stocks that consistently are profitable. Hold on, this thing actually gets worse. Okay, so from there, we're going to go and take a look at the statistics for NVIDIA. As much as you love NVIDIA, you probably never seen the statistics for this company. Let me just briefly show them to you. Okay, are you ready? I don't know who said this. Orlando. Revenue per share, $6.76 per share. That's what revenue they have. Okay, $6.76 per share. That's how much money they have coming in for each share they have. Now you're paying $182 for a revenue share of $6.76. But hold on, it gets worse. Book value book value, $4.11 per share. So I said it earlier, to find the valuation of a company, it's what do they have coming in? Okay, what is their cash flow look like? What is their revenue? What is their book value? The book value is if you take everything they own, that bottom line sheet, what do you call it? Assets and liabilities. Assets and liabilities. What do they have coming in? What do they own? What do they have going out? Well, this thing's only worth $4.11. So you're paying $182 for a stock that's only worth $4.11. Why? Why are you doing that? Let's get rid of this. Now let me show you something else. We all know who General Motors is, right? Okay, revenue per share, General Motors, $182 per share. Each share they have out brings in $182 per share. Well, the shares are only $59 per share, and it's bringing in $182 per share. Hold on, it gets better. Hold on. Book value. Book value, $69 per share. That means the stock you are buying for $59 actually has a value of $69. So 59, 69. The book value of General Motors is a lot higher than the stock price. However, NVIDIA has a 1 penny dividend, $4.11 book value. It's only worth $4.11. So why the hell are you paying $180 for it? And the dividend, 1 penny? What are you freaking kidding me? Really? Why are you even suggesting it? It's okay. You can invest in anything you want. I sure as hell ain't going to do it because it doesn't fit. Okay? It may look great. Maybe NVIDIA. Yeah, it's not what I'm looking for. If you're looking for capital growth, fine, do NVIDIA. If you're looking for cash flow, NVIDIA ain't it. Sorry, it's just a numbers game. Okay, and the numbers just don't fit for me. You like NVIDIA, you do it. I don't give suggestions, I don't give tips, I give you my opinion. My opinion, NVIDIA, $183 to collect 1 penny? Hell no. Sorry. Absolute worst case scenario, stock goes down, I'm getting 1 cent. Yeah, no thanks. Anyway, next. What do we have here? Rich Gustafson, how are you today? R. Pasarino, I can't read that one. Endersay, sir, check on LRCX. Uh-oh. I think this is going to be a lemon. LRCX. Hell no. Come on, weren't you listening? Why? Seriously, why are you looking to buy a stock that is at the absolute high of the year? It might go higher. Not something I want to look at. Okay? High of the year is time to sell, not time to buy. I'm not looking for capital gains. I'm looking for cash flow. So if I buy it at the high of the year, how do I know from going from 95 to 132, that's $47. $47 on a 90. Okay, watch. Let's go zoom a little closer. Okay, the bottom's right there. Right here. 94. Go. So it goes from 94 to 132. That's 40 some odd dollars on a $96 stock. That's over 40%. That's a 40% increase. Why the hell do I want to jump on that? No. I'm out 3, 5, 6. I'm 3%, 5%, 10%. I'm out. This is 40. You think no. I don't buy it that. That's me. If you like it, you do it. I'm just telling what I'm doing. I'm not buying at the high of year on anything. Next, Big Ron Merck. How you doing? Rashid, how are you today? Morpho. Michael Williams. What does morpho mean? Oh, Brian Woodward. So how do you collect the premium? Uh-oh. He's new here. He is. He's really, really new. Okay, so let's look at, not Macy's. Ford. Target. I need a good one. MSFT. Microsoft. There we go. Okay, so here's Microsoft. This is how you collect a premium. Are you ready? All right. 30 days ago, we're at 522. We drop down to 492. We shoot back up to 514. Great. Let me buy it at 514. Sell the 515s. Collect 460. It's not 1%, but this is just an example. So what I'm going to do is I'm going to get rid of this. I'm going to change this from single to covered call. Because a covered call, there are literally hundreds of videos explaining how to do a covered call, the pros and cons against a covered call. Thing I like about them, number one, stock doesn't have to move at all. I'll still make a profit. Number two, it's simple, it's safe, it's predictable, it's consistent. I can do it every single week. 26 September, that's this Friday. 3 October, that's next Friday. 2 Fridays, 3 Fridays, 4 Fridays, 5 Fridays, so on and so forth. Every single Friday, there's an option expiring, which means I can get cash flow on this every single week. So if I buy it at the current price, if I sell it at the closest price right there, this is what I'm collecting. So all I got to do is do a covered call. This is what a covered call looks like. Okay? Buy 10 covered calls. I'm using 10 just for the fun of it. 10 covered calls, Microsoft, 26 September 25. That means this option that I am selling to someone else, giving them the right to buy it from me at a certain price by a certain date. Certain price, 515. Certain date, this Friday. Profit, $4,140. What is it costing me? $510,000. Well, it's 1,000 shares of Microsoft. What did you think it was going to cost? Let's edit and do just one contract. Edit. One contract. Yeah, 500,000 might be a bit much for some people. All right. One contract. Buy one covered call Microsoft. It's a covered call. Buying the stock, selling the option. Okay? Now, 26 September 25. That's for this Friday. So whoever buys it has between now or tomorrow morning and this coming Friday at 3:59 p.m. Shit, I get off the pot. I mean, buy it or don't. That's it. A covered call just gives them the right to buy it, not the obligation. Unlike a put where you are required to do something, a call option, you have the right, not the obligation. It's kind of like a privilege. Okay? 515 call against Microsoft at the market to open, blah, blah, blah. Here's the profit. Here's the investment. That's it. That's how you collect the premium. You buy a stock, you sell somebody the option to buy it from you at a certain price by a certain date. In this example, Microsoft, the 26th September, that's this Friday, the price $515. So the stock could shoot to the moon and that person has the right to buy it from me at $515. It can drop to the floor. That person still has the right to buy it from me at $515. It's the right, it's not the obligation. You can do it if you want. Holy crap, we're at 391. It means I'm going to stay here longer. Okay? I'm going to stay on until it drops below 300. Let's see how long it goes. I got nothing else to do. I have nothing on my list to do tomorrow. So let's hang out and let's do stocks all night. I don't care. All right, I'm just kind of curious. How long can I go before my eyes stop focusing? Because I'm getting older. You know, it's not like what it used to be. So if you think the golden age is golden years is golden, no, it's not. They just say it's a crock of shit. Okay, you get to retirement age, things just don't work like they used to. Dawn, thank you for that. Think about it. The older you get, things stop working. Okay? Stop thinking that. That still works fine. Okay? Perfectly fine. All right, anyway. Let's keep on going. All right, what do we have next? Eyes are starting to lose focus. Where were we? Where were we? Where were we? Okay. Chris doing work, weekly or daily? It's weekly, Chris. Sorry. Willie, SPY. We already looked at SPY. It was going to be a no. Aldry, I don't do Forex. It's an absolute no. Night Drift, WW, an app or a website? Yes, through a brokerage. Cool beans. Let's keep it going. Thank you, 86. Love that guy. He's always doing good stuff for me. Amazon this week selling put strikes 225. Okay, so Derek, I'll take a look at Amazon, but I'm not going to tell you anything about puts because I give away one strategy for free. All right, I'm not going to cover cash secured puts. Terribly sorry. Okay, I have to draw the line somewhere. I mean, come on. I'm here for free doing all this stuff every night. I have to draw the line somewhere. I mean, I know a lot. I do. I can be here all night long telling you all kinds of nice, neat, fun stuff. And most of you will say, I'm out of here. This is way over my head. So I want to keep it safe, simple, predictable, consistent. Okay, the same strategy I taught my 9-year-old. I got 1,200 videos on YouTube. You can go back and look at all of them. They all basically say the exact same thing. Simple, safe, predictable, consistent, 1% per week. That's what I'm looking for. Which one? Amazon. AMZN. Now, I don't do Amazon for a specific reason. It doesn't have any dividends. So without a dividend, it's hard for me to track, is the company profitable and when's the right time? So he's recommending my strategy of buying low and selling high. Billy, that's funny. C'est moi. Oui, mais c'est moi, c'est moi. Bonjour, bonsoir. Comment ça va toujours? C'est moi? C'est bon? No? I'm going to invest in Tylenol now. All the lefties will be eating that like candy just in spite of Trump. Okay. I don't want to get into that, but okay. Do you like Salesforce? It hasn't been around long enough, in my humble opinion. Merca. Is that, hold on. Larry the Cable Guy. No. Merca. Oh, the fat guy. Fluffy. Yeah. Okay, Merca. All right. Is there any advice on Hormel? Ooh. How's SNDL? Uh-oh. What the hell is SNDL? YouTube. I'm terribly sorry, you guys on YouTube. I don't have a moderator on YouTube, so I try not to pay attention to what's going on. I feel bad for you guys on YouTube. I really do. Because I want to help as many people as I can. But I can't do it on YouTube because there's too many children. Because, yeah, you got to be 18 in order to be on this chat. But on YouTube, they have no parameters. And I get some of the stupidest, weirdest questions from people on YouTube. What's up, G? Yo, what's up? No spamming, please. Thank you, Ellie. Cava doesn't pay dividends. Yes, I know that. Trying to see about a dividend on it. Okay. Hi, please give me a job. I have no idea. I can do portfolio reconciliation. If you, send me a DM. If you can do an Excel spreadsheet or a profit and loss spreadsheet, itemizing everything bought on a certain stock, the profits and the loss per stock, because when we, hold on, I'll give you a quick little, what do you call it? Sales pitch, okay? Monitor, account statement. Here it is right there. Okay. If you can take this crap here and itemize it into a spreadsheet, that makes sense. Because at the moment, Thinkorswim doesn't do it. Okay, I buy a stock, and when I collect dividends and when I collect premiums from each and every stock, well, that money gets put into a cash account. It doesn't tell me what the stock does. So how can you take this information, which will come by on either an HTML code or a CSV code. And you're going to take that and put it into a profit and loss sheet that allows me to look at each individual stock. Is it profitable? How many dividends did I collect? How many premiums did I collect? What was the purchase? What was the sales price? Where am I on each one? If you can do that, hey, send me a DM. I'll give you a job. So far, I've hired 6 people to do it. 6 people. Not a single person was able to do it. Because this right here, to me, I know how to read it. I can. I mean, I can tell you each one of it, what it is. But I want to be able to look at it simplified. Okay? I don't want to have to find each one of these things. Dow's here, Dow's there. TSL, DVN, Intel, blah, 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 blah. Now, that's only 4 days. Well, when you get to okay, that's 30 days, and that's just one account. Look at it all. That's confusing as hell. No, I don't want to see all that crap. See, I want to see, here's the profits, here's what's coming in, this is the fees, this is the fees, this is the running tally. Okay, I don't want to see all that crap. I want to see IBM. What did I buy it for? What's it at now? What are all the profits I came in? What are the dividends? What are the premiums collected? Not this crap. This is confusing as hell. And if I show that to a client, they're going to say, what the hell is that? It looks like freaking spaghetti. If you can do that, hey. Okay, if you can do that, send me a DM and I'll help you out. All right, let's get out of that. Let's go back to this. Let's go there. All right, here we go. All right, so much for the sales pitch. All right, so Derek, AMZM, 225. All right, hold on a second. High, low, where was it? Where is it? Up, down, up, down, up, down. So it's coming down at the moment. You do the 225 puts, you might be buying that thing at 225 in a couple of days. Now, do you really want to buy it at 225? Well, what's the 225 put going for? It's going for 172 per contract. That's 0.5%. What the hell would you want to do that for? Why not just buy the damn thing at 227, sell the 227s, get more than 1%. If you're selling 225s, you're getting 0.5%. What the hell for? You either like the company or you don't. Okay? So if you buy it here, okay, sell at the money, it's 305, that's more than 1.25%. Why the hell? No, see, I don't do cash secured puts. It's like a covered call because you have to put up a certain amount of money just to sit and let it rip. All right, we're at 315. This baby's dropping fast, which means as soon as she hits 300, I'm out of here. 321. So if you want me to stay longer, like, share, comment. You know how that crap works. Like and share. That way the people get more. Yeah. Whatever. 326, 328. Ugh. All right. Deltron, how are you today? Jeremy Williams, how's your day going? Yay, Jeremy. Okay, let's go over to here. See, I got 6 screens in front of me. Okay. I'm done with the questions here. Ooh, Cape Cod Bay. Joe D. Chris, how are you today? Awesome, dude. Okay, I'm going to go over to here for a bit and answer some of these questions. What about ARBB? Chelsea, I have no idea who ARBB is. Oh, another reason why, check that out. Dice, thank you. Another reason why I don't like Amazon, they don't have dividends. So without any dividends, how do I know when to buy? Because a dividend stock has a tendency to increase before the dividend is paid. So if I look at the calendar as the dividend's coming, oh, great, the stock, we're at 302. It's at 300. All right, no more stocks. Now we're down below 300. That's it. All right, so I'm going to just answer questions, and we are done for the night. All right, it's below 300, so we're out of here. All right, let's just do questions. I don't do Amazon. They don't have dividends because a dividend stock will do the same thing week after week after week after week. Okay, and every 90 days the dividend is paid, so the stock has a tendency to go up just before the dividend date. Well, without a dividend, how do we know when this is going to move? See, knowing when a stock is going to move is very important for me. See, it takes the odds and probabilities and stacks it in my favor. Reverend Benjamin, how are you today? Uh-oh. Somebody wants to take a look at SPYI. Why the hell do you want to look at that? All right, I missed some of these questions. All right, let's keep on going. Franklin, how are you today? All right, Muse Forex, hello. Reverend Benjamin, what's going on? If you hold your bag, wait a minute. If you hold your bag holder, I have no idea what that means, Edwin. Sorry. Willie, SPYI, dude, take a look at the consistency of profitability on SPYI. Okay, you need to have access to a financial website. So a financial website will be able to tell you the high, the low, the open, the close, what the dividends were for as long as far back as you want to go. So if you look back 20 years, has the dividend increased every single time, year after year after year? Okay, the answer is no, SPYI, no. Reverend Benjamin, you're interested. Okay, alrighty, send me a DM, send me a number. I'll give you a buzz. Vlad, how you doing, Vlad? Klarna opinion. You have to give me the ticker symbol. I have no idea what that means. No, not always. I go more off a percentage and not points. I also check support levels. Hey, I'm going to agree with 86. La 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 la. Okay, let's keep on going. Under Armour. We'll have to take a look at tomorrow. I'm not looking at any more stocks. We're just going to do questions and we're out of here. Costco, no. No, the only reason I'm saying no to Costco, I don't do stocks over $300. And what is that, like 900? Under Armour analysis tomorrow. Your feelings on weekly deep in the money stocks. Michael, you have to give me an example. Thoughts on CMG. Isn't that Chipotle? They have no dividends. So without a dividend, it's hard to judge the predictability of the movement. Okay, so how do we know when CMG is going to move? Oh, we could look at the earnings. Maybe. My own, please don't spam chat. Thank you. What's the symbol behind you? AMZN, Amazon. Michael, your feelings of weekly deep. Okay, we're going to take a look at it tomorrow. Ask a better question. Franklin, I got it. 1% is good. Thanks. Well, 1% every week. That's over 50% a year. I'm perfectly okay with that. Vlad, Intel, look at it tomorrow. CMG tomorrow. Hey, James, how many years of doing this have you earned 50%? About 15. TQQQ, please. All right, again, look at the dividends on TQQQ. How consistently have they increased them? That's my go-to. Okay, is it a company or is it an ETF or is it whatever it is consistently profitable? If the money they're giving you every single week, is it higher and higher and higher or is it not? Okay, Tactician of Chaos. That's a cool name. YE, tomorrow. The sun will come out tomorrow, Vlad, tomorrow. Candle Talks, how are you? Abdi, what's going on? Stuff and Things, Pen, tomorrow. Why no NVIDIA? Joe, NVIDIA is not profitable for me. Their dividend is 1 penny. The stock is 180 whatever and change. The book value is $4.11. Why the hell would I pay $180 and change for a company that's only worth $4.11? Okay, I'm not looking for capital growth. That's what NVIDIA is. They take all their profits, put it back into the company to grow the stock price. Not their valuation, because their valuation is only $4.11 per share. Take a look at the income, the revenue per share. The numbers, they just don't work for me. Small value stocks fall off. Not quite sure what you mean by that. Music, G Pro, I'm assuming you're talking about GoPro. They haven't been around for 20 years either. Centillion, Joseph, how are you doing today? Filippo, Vinny, what stocks? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. That's over 300. STXS, it's a robotics for surgical treatments. Is it over 20 years old? Have they been consistently profitable for 2 decades? If not, no. Jake, Rocket Lab, no. Tiger, Karush, Maestro, Dylan, what's happening? Don, Joe, JM Growing, Chevron, CVX, tomorrow. Lord No Face, what's going on? Crazy work. Okay, Rihanna. I'm 16, looking to put 4,000 into stocks, but I don't know where to start. What is a good stock? Okay, Rihanna, number one, if you're 16 years old and you want advice from me, you shouldn't have told me you were 16. Okay? I can't talk to you. I'd like to be polite, but for me, an adult, to talk to a 16-year-old, no, doesn't work. Terribly sorry. Okay? Can't help you out. I have a firm, okay? I had a 16-year-old daughter. I had 2 of them, okay? Talking to an adult, no. Online, a stranger, yeah, I'm as strange as they come, honey. Really, I am. I can't talk to you. Sorry. No, I mean, I can, but I'm not going to. All right? Hope you understand that. If you're looking for advice on what to do with money, you talk to your parents, you talk to your grandparents, you talk to someone that you can trust. Okay? If not, have them ask me. I'll be more than glad to tell them, but you're 16. No, 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 no. All right. Sorry, folks. I have 2 daughters. Granted, they're in the 26 and 27 now. But when the internet was in, yeah, at 16, no, I don't want them talking to an adult. I don't care what the adult was saying. Lord No Face to start with. All right. NDP, it depends on the price. Okay. Didn't they go bankrupt? Okay. Filippo Vinny, I have no idea which one you're talking about. Vlad, Advanced Micro Devices, we can look at it tomorrow. Venice, Amazon, we already looked at that one. Coot, what's going on? Tony, not a chill guy. How are you? APLD. Now, I like APLD. However, we're past 11 o'clock, way past my bedtime. We're under 300, so I'm leaving as soon as I finish up with these questions. Tomorrow night, I'm here every night, so ask me tomorrow night. I am a lion. I'm lying. Okay. Chipotle tomorrow. Santos, what's going on? Kyle, fundamentals are what matter, not being at high of the year. I'm going to agree with you, Kyle. Callum Bluestone, start with looking at Dividend Kings. Thank you. Dividend Aristocrats. You got it. Filippo Vinny, Costco, out of my price range. Sorry. Venice, Tesla. Now, I'm changing my mind on Tesla because I'm forced to. Okay? Now, I hate to admit that I'm forced into doing something. Okay? NVIDIA ain't no way in hell. Because there's always companies challenging to become the next chip maker. Always. I can't. Okay? Hey, I'm all for it. If you can think of a company that's going to challenge Tesla, that means rockets, electric cars, robotics, atomic, autonomy, autonomy, robotics, drilling machine, what else? Solar. Put all that stuff together. You come up with one other company that's going to challenge Tesla. One. Come up with one. Okay, this guy is gearing up to boldly go where no man has gone before. Remember? Star Trek, a 5-year journey to boldly go where no man has gone before. He's gearing up to do it. And you cannot get away from that. 50 years from now, 100 years from now, who's the first person to land on Mars and colonize it? Tesla. Can't get away from it. He has too many things going in that direction. I can't get away from it. So yeah, I'm going to have to start investing in Tesla because it ain't going anywhere. But I have to do it in a manner in which I can predict its movement. And we're going to probably use the seasonality chart for that. User 1993, 773, whatever. No to NVIDIA. We already looked at it. New Jersey 78, back again. Dude, I haven't seen you in a while. Riley, let's take a look at tomorrow. Amazon tomorrow. Which broker is this? This broker is Charles Schwab. Okay, this is Think or Swim. They bought it from TD Ameritrade. Wow, how many more questions? What's the scenario where you lose the most? Hitting the wrong button. Who said that? 45322. What's the scenario where you lose the most? Hitting the wrong button. That's it. Okay, most people, especially beginners, lose money by hitting the wrong button. Now, I say that because it's true. Now, I've been trading for over 30 years. I hit the wrong button 4 times this year. And one of those times, I lost $2,500. Hit the wrong button. Damn it. I remember it clearly because we were on a live show, on a live trading show. We were actually trading live. I hit the wrong button. Everybody watched me hit the wrong button, but nobody said anything. They let me hit the wrong button. So yeah, most people are going to lose money by hitting the wrong button. Okay, user 1993. You don't do options. Hold on, what the hell are you doing here? Sorry. Tara Love, what's going on? Mick Flipper, back again. Milano, Manolo, you're still here, dude? You've been here all day. But Microsoft is a good stock to keep, ain't it? Yeah, but think about it, Milano. It goes up, it goes down, it goes up, it goes down. So think of it this way. As she's going up, you buy. Gets to a certain point, you sell, you take your profits. When it gets to the high, it turns around, comes back down again. When it comes back down, let's open it up. MSFT. Wait a second. No. We'll have to look at it tomorrow. So you sell as it's going up. You buy as it's hitting the bottom and turning around. Lord No Face, let's learn. All right. Let's keep on going. Monique, how are you doing, Miss Monique? Superlative. Okay, thank you. Chuck Jensen. I love it, James. Thanks for staying on. Alcoa. Alcoa, great. I love the company, I do. But we're past 11. We're past 11:30. Now, I say I'd stay on until we hit, under 300. So I'm getting off as soon as I finish up with these questions. And you guys just keep hitting me with questions. Leah. How you doing, Miss Leah? Guys, please follow. All right. I don't approve of that. All right, let's get this. All right. I don't like when people do that. All right. So get your glasses like me. Get your glasses like me. Monique, I have no idea what that means. 007 AMD Advanced Micro Devices tomorrow. Sounds like allergies to me. On me, my eyes start to like cry. Yeah. Okay. Well, it could be, just could be, that I've been up for, what time is it? Too long. That's what it could be. So how do I make 1% a weekly? Dude, you just got here, and we're getting ready to wrap it up. But if you like to come back, I'm here every night, 9 until 11. Okay? Okay, so that being said, let's finish this up. Shaggy, what's going on, Shaggy? My guess, if you're collecting dividends, it's long-term. No, Shaggy, not once did I ever said I was collecting dividends. I'm collecting premiums. It's a little bit different. Wildcat Sam, dude, you're still here? Dude, isn't it past your bedtime too? I know it's past mine. Do I like Comcast? Merv, I love Comcast. I'll have Ford too. Thanks for the information, Wildcat. You're welcome. Garrett, can you share some of the tickers on your watch list? Absolutely. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. There you go. That's over 300. CLM, hell no. It's a monthly. I don't do hell no. Quick demo. Dude, we've been doing it all night. Been up since 3 a.m. and still working. Yeah, Hollywood. You're in Hollywood. You're 3 hours behind. Yeah. Anyway. Yeah, and you're younger too. Okay? Wait till you get in your 60s. You can't do those 24-hour things anymore. Kilroy, bro family. What's going on? JSK. Kilroy Wolf, we'll take a look at tomorrow. Les Weeble tomorrow. Mia, thank you for taking the time. You got it. Gio, what's going on, Gio? Do you hold stock for long term and collect dividends, or just sell when you collect your 1%? Ronik Patel. How are you doing, Ronik? I just looking for the 1%. To me, long-term is 30 days. That's long-term for me. Where can we check the upcoming stock split list? Uh-oh, I'm at the last one. Lee Chocolatier, right here. Let's get rid of this. Let's go to Market Watch. Get rid of dividends, and you come up to splits right there. Nothing on splits. Hold on, let's go this. Let's do this. Okay, all these purple ones right there, those are all the companies that are doing splits. Roanoke Patel, you're welcome. Keep showing up. I'm here every night, 9 p.m. All right, so done. I can't do YouTube. I apologize for the people on YouTube. I really need a monitor on YouTube. Somebody to actually come on at 9 and get rid of all the boneheads. And you know what I mean by bonehead. You can listen, you can read a question and say, oh, that's a stupid question. Just hit delete. All right? Or you can send them a message like, stop with those stupid questions. KRT, Kevin, how are you tonight? Kevin, you're a little late. I'm not looking at anything else. I'm just getting ready to sign off, but I do want to answer the questions. Okay? So I got all these questions. KRT, if you want to show up tomorrow, we'll look at it. You can let them know they can daily bonus points. Okay, blah, 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 blah. Okay, so anyway. DKG, evening, James. I think Marvel and LUV are getting called away this week. Cool beans. Sounds good. Have a good night. Thanks, Kev. Fasal, good evening. Manny, how are you doing? Bordelio, how are you? Uh-oh, I missed a bunch. All right. Do I use any indicators? Yes, I do. The dividend is my indicator. Merv. What's happening, Merv? Dr. Deb, what's happening? Campinator on your YouTube chat is asking you about Target. Okay, we'll have to look at that one tomorrow. Thanks for your time, James. This has been awesome. Good fella game. Oh, damn it. You're new, dude. That name I would remember. Steve, TSLL. Okay, I like that one. HKMPY, never heard of it. I can probably do that data analysis if you on Thinkorswim. Oh, that'd be awesome because it comes in two formats. One is HTML and the other one is CSV. Okay, but what I'm looking for is to be able to look at my portfolio as a whole, all the current positions, all the positions that I have categorized, like from the beginning of the year or the first quarter, the second quarter, so on and so forth. Like if I'm looking at IBM, I want to find out every single dividend I collected and every single premium I collected on IBM. And then I want to do the same for Seagate. I want to do the same for Intel. I want to do the same for Microsoft. So I want to be able to see which stock performs the best over the years. Because, you know, they're all good stocks, don't get me wrong. But there's always going to be those that outperform others. And as we all know, those ones would take precedence over the other ones. If you think you can do that, DM me with your number. I'll give you a buzz and we'll chat. We can even do, what do you call that? A Zoom call. Ferns, how you doing? Bev, what's happening, Bev? Or is that Bay? B-E-Y. Okay. What do you think about Plug Power? You got to give me the ticker symbol. Is it P-L-G-P-U? Or I have no idea what it is. Sir, tell me about Plug Power. You got to give me the ticker symbol. Uh-oh. Uh-oh. See, insulting me is not a way to get on my good side. Okay? Now, you asked me about Plug Power. Great. Wonderful. But then you go in and said, are you blind? Can't you see or read an older man comment? Now, that's just insulting. See, you're thinking, this is just me coming off from the attitude which I'm getting. You're thinking you're the only one here. I got 6 screens in front of me. And the 6 screens in front of me all have questions. So just because you have a question, okay, you're not that high of a priority on my list. Because if you were, you wouldn't be on this screen. You'd be on the screen over there. For the people over there take precedence over everybody. Okay, you're new here. Well, not really, because I remember you being here before. BEY is not one of those names. That's normal. But are you blind? You can't see or read? That's not a nice thing to say. If you got nothing nice to say, don't say anything at all. Don't need to be rude. Trey Guy, is there a software you can automate tracking option performance? It's painful to do so manually. I'm going to agree with you. It does. Good fellows, thank you for that. Let's keep on going. Mr. Bruner, thank you for that. What platform has the most viewers? I tried YouTube. The platform that has the most viewers is the other TikToks. I have 2 TikToks. The 10MinuteTrader, which is the one you're on, and Dividend Stock Talk, which is 3 screens over. Okay, so yeah, I got 6 different screens. I usually have 9, but tonight I only have 6. And anywhere between 5 and 30,000 people will come through these 9 different channels. And for me to pay attention to all of them is impossible. I can't do it. I try to answer every single question. And I'm here for an hour longer than I'm usually just to answer questions. So I don't appreciate the insults. Okay? Deer Park, thank you. And Twitch. Okay. Unfortunately, I can't read the ones on Twitch. Okay, because it's on the OBS, the Open Broadcaster. So the OBS has, I think, 3 or 4 channels, and I get 6 channels here. Okay, I can't see the ones down there. So yeah, my 2 boys are coming to help me because, you know, they're a younger generation. They understand this stuff better than I do. So I'm going to give Jacob a call. Say, Jacob, I need your help. Other than that, I've answered all the questions. I don't see any more. So I am done for the night. We'll be back here again. Same bat time, same bat channel. All right, you guys have a great night, and we'll see you again tomorrow. Done over here and done over there. So that's those 2 done, done, done. And this one here, stop broadcasting, and we go right there. Done with that one. You guys have a great night over here. TikTok number 1. Come on, come on, come on, come on. Uh-oh, it's being difficult. There we go. And now, uh-oh, here we go. Come on. And now, there we go. Yeah. Okay. Good night, Doc Dev. Yeah, send me a number. I'll give you a buzz so we can chat. If you could do that, that would be awesome. Over here on YouTube, like I said, I feel bad for you guys.